opening up. Okay, so let's go to any chart. So basically, what is the new week opening? Sunday. Which chart are we looking for to find our new week opening up? The ones that have FXCM. Going into another ones, for instance, Wanda. The new week opening up will be different every single week. This is a range. You see, in this case, you had a range with a failure swing, meaning this is our dragon liquidity, and this was the bias is on Monday. And for instance, like what happened today on FXCM, which is small, like this, I can utilize the time frame, watching if we can find a range here, something like this. That will be a turtle soup. Why is also important? Because acts like a magnet. I mean, for the algorithm, the new week opening up, it is a real magnet. I mean, it is a real liquidity void and acts like a magnet. So if price, another use I do with the new week opening up is to use it as a support and resistance. Imagine it's consolidating inside. When there is a huge new week opening up, price consolidates a lot inside. And when this happens, these are low probability conditions. Okay. And when it's small like this, I mean, the algorithm doesn't see a huge liquidity void, so price doesn't spend a lot of time inside and just leave it. And when it leaves, this is a low resistance liquidity run, meaning acts like real resistance. Look at how precise it rejects. You see, look at the bodies. Now, price will make will put more importance on the previous, the current new opening up regarding the previous ones, and even more if this. So what do we see here? Look at this. This is a range. Look at the bodies respecting the current new opening up, acting like a support. Opens below, so this will be our down liquidity. And look this Friday, and look how opens on Monday, going straight to the down liquidity. Yeah, look at this week. This was the opening ups, acts like a magnet. So look at this. This could be this one, and look at how precise it is the high of the day. Let's say here. I don't know. Well, it doesn't reach, but meaning that we already know the next bias for the next day. And yeah. You see? So previous day failed to reach the previous new week opening up, and look at the next day. Could be, to me, it's the only PRA that it works, because this is a real liquidity void on the chart. So look at the bodies and look at the bodies. Acts like a real resistance in this case, and lower. Okay, So price was bullish, so finally breaks above. You see, look at the bodies. Look what happened here in the current gap, but also some previous ones. So let's find. I think it is everything said. Let's find some examples. Starting with OZ. And by the way, let me check what's going on here. Yeah, still doing nothing, and look why. But tomorrow will be interesting because of the next day we have. This is the most important day of the month for the London session because we had this news. Particular this one. This is the most important London news regarding euro. Okay, and we also have for tomorrow. Sorry, for Wednesday, this news, which will be really interesting. Okay, so let's come back to the charts and let's go to the first example. Okay. So on that day, let me first. So this is the current new week opening up of that particular day. I mean that particular week. And let's find that economic calendar. What happened? This is Asia. I didn't trade it, but it was really clean. 25th of June. Let's see what happened that day. Well, actually, will be here or here. Yep. We had CPI on OZ. Look at this. So how the new week opening up will help us. So we had that 8-hour range here. Look at this. We already have our down liquidity. So going to lower time frame, let's see what do we see. We can refine something, yes. Remember we were here. So this is the bias. So from here we are allowed to buy. Let's refine even more. Look at 3 hours. Okay, this is a beauty. You see, what is this? This is a 2-hour reset range where from here, from exactly here, we are able to buy. Okay, meaning that this is also the 4-hour. So how we could trade that news. So if this is a 4-hour range, going 10 minutes left, what is this? So opens first up, still going long. Still on the 4-hour range, so still going long. Where is our down liquidity? Here. So as it is a news, let's find out 4 hours. Okay. Stop loss is safe here. 4 hours. And let's see what happened. Failed to reach it, so we can still go long. I mean, this is not an optimal long because it's just 3 pips, but for you to understand that this could be a good long, okay? And then one risk ratio, something like this. Imagine we box here, example. Okay, so look at this. Look at how small it is this in an entry. Okay. Going into New York. What is this? This is a reset range. So from here, we can sell. This is what I see. And this is our ground liquidity. Let's refine our entry and let's see why to me this is a fair swing. So to me this is not a fair swing, but a turtle soup. Look at the end of the 8 AM candle. It tries to break the higher high, but why it doesn't break? Because the 2-hour range is already restarted, so price doesn't need to go above again. This was the maximum price to hit before going to the ground liquidity. So because this was at the beginning of the candle, at the end it will fail. And where? Look where it failed. Look at the bodies. You see, this is a 1 minute chart, and look at how precise 50%. It completes to the pip 100%. Here exactly the same. So where is our entry? At the 9 AM candle, or inside the range. Why? Because to me this is already going into the next candle. So look at the time, 59 AM. Imagine we didn't sell here, so we sold here. This was the 2-hour restarted range, and this is our down liquidity. Okay, creates another range, another sell opportunity, and goes straight to our trade profit. Look at the time, it's going to the, well, yeah, this is an exit because it is not the end of the 9 AM candle, but if we want to wait to the new, this is 55, so this could be a really good exit when the 10 AM candle makes a lower low. And then we don't care if it reverses or if it continues lower. Okay. All right, so next example. This was a really, really good trade. So the GAP. And going into '20 option. As always, new wick opening up. So look at this. For instance, in this case, this is the current new wick opening up, but look at this one, a huge one, which is at the same price of the current one. So in this case, I'm not, I will delete this one because it's too big and it disturbs my vision. I mean, I don't like seeing this. I mean, you see, look at who acts like a, and finally it breaks. and acts like a resistance. Here, failure swing, and this was 6 weeks, 6 weeks, yeah, 1 month ago. So even this is even it is a old one, it is still working. Look at this, for instance, who precise, completes, and reverses. But to me, I prefer the all new week covering apps. This is probably I'm not wrong with, we have SMT with U, so we are inside the high time frame range. This is a pending one. And what happened here? It opens above, so needs to rest. Look at the close at. This is it closes here at 4:59 and opens here at, yeah, it opens here at 5 a.m. going into New York. So we want what? Power of 3, making the turtle soup of the 4-hour range, and this is our bias. We will see probably a low time frame range here, turtle soup. This is what we want to see here. Pending range on 1 hour, for instance, going into the bias, and finally the down liquidity. That's fine if this happened. Look at this. So we'll refine our entry as much as we can. Look at this. And we also have news, so perfect. Why? Because we already know what will happen and exactly where we buy in this case. So going into the H3, we want to, in this case, buy as close to the news, as close as possible to the news. So turtle soup, well, the range turtle soup. So 10 minutes left. First long to the turtle soup. Second long, power 3, still inside the range. So this is only the bias, remember, this is not our drum liquidity. So because of it is the bias, we can still going higher. So we buy again and look at this that closes above, and the next range, the next candle. Finally, this is another long opportunity. And what time is this? Yeah, we can take profit here or do this following the 5-minute range. Okay, really good. This is outside the new week opening range, but looking at the 4-hour range, it just look inside. These are long opportunities. Thinking like a power of 3 of the 4-hour 5 a.m. candle going to New York. So what do we expect? We expect 8 a.m. Another pen. And by the way, I forgot that we had a higher down liquidity. So this to happen. So exactly, we had news at 2 a.m. on GBP pairs, and we already know the bias. Remember last quarter, failure swing, and boom, perfect range. I mean, if you watch this and you think like a ICT pattern trader, you'll see, okay, took the sell liquidity, look at this, and when it took this OTE, and look at the phantom trend line. So this is sell-side liquidity, right? All right, next example. It's really easy, you see. GP on the previous day. So yeah. So exactly as I said before, when it breaks, we act like a support in this case. It's really simple. We are in the high time frame bullish range, so look at this, opens above, so needs to restart. But remember, we are bullish, so as soon as it creates a new candle, same day on EU, 17th. Let's see what happened here. Exactly the same. Going into New York, where is it's support? And look at this. What is this? This is a restarted range, but as soon as it creates a new one, this will be the pending one. We also have this pending one and going into the target. Let's see if it fails. No, it reaches that day, so there you go. Easy trade for that day. All right, so the last one. This will be a quick episode, really simple. This is a trade I took a month ago, only for the new week opening up. This was my only trigger. You'll see now why. Really simple. Yeah, that day. So what do we see here? Every time price tries to reach the higher prices, it fails because of the upper band of the new week opening price. Look at how it looks at. I think it is. Well, I think it is the next day. It is even more cleaner. I don't know. Yeah, look at this. That's exactly what I want to see. It happens the same here, going into New York, able to sell. This is also a failure swing. So to me, this looks like a 5-minute range, and the ideal shorts are inside here. Let's imagine here, and aiming for 3 hours. What's the best that could happen? That our down liquidity, which will be this one in this case, is not reached. So we already know the bias for the going into New York. Well, this is a failure swing also. So this is an R. Look at the time it is created the low at the end of the 4 a.m. candle. So it fails, so this is still longs. And going into 8:30, imagine we 5 a.m. the low is already done. Look at this. We're inside that 5. So to me, it looks like a turtle soup. So long here and turtle take profit here. Aiming for 3 hours. This is safe. And let's see what's happened. This is the case we take that long, okay? But imagine in this case, they profit here. Imagine, I don't know, let's see if there is a bigger range. not sure. There is also this one, but exactly varies again. So when a new range is created, we will use it as the new one. So this is the bias for the news. So that could be into turtle soup. So which is the minimum objective for the long? It was here, right? Here. So as soon as, imagine we are not long, so as soon as it creates the long, we sell. So as soon as it completes the restarted range, we sell here. You can delete this now. Well, that's really quick. I mean, we maybe have not even, well, I don't think that we have not even a second. So in this case, if we walked here, we would be stopped out. See, because this happened later. We need to see what kind of new was this. It is a tricky one. The GDP, because that I hate what happened on that news, or maybe CPI. Let's see, the 12th of March. Yeah, CPI. That was a tricky one. Okay, so the episode is gonna end here. I think it's clear why I use it in and how. And thank you for watching, and see you on next one. Hello and welcome to the 8th episode. This one will be about the London setups. And first of all, let me make a quick review of today London Legend New Year session, because I only did the video trading the PMI. So really quick, you complete the today range. You can see it on the chart, but look at forex.com here, perfect. And you already know what happens when it completes a high time frame range. It reverses, and you will see that this is a figure swing. Here, yep. This is a filler swing. Look at this, look at the time. Remember, we exit on the new candle, and what happened at 55, creates a low, and 4 a.m. tries to meet the lower low and fails. So to me, this looks like this. So what do we see in 1 hour? We already have the bias for all New York, okay, till here. Alright, so easy longs. Well, you already know how to trade. This is a pending range going into the down equity, which is a 1 hour range high. And look at this, easy longs here, and boom. Alright, so next pair will be GBP/USD here. Look at how beautiful is this 12-hour range. Let's refine if we have something. Nothing here. Look at this. Is the bias for New Year's session and the final down liquidity. So going to 1 hour. What do we see here? Which is also the news. Real quick. Real quick. For theory, we have flash services of GAP. So which will be here. We are in the 12-hour turtle soup. We don't need the turtle soup in 1 hour. It just complete this one. So now it reverses, creating this one. The ideal longs are here. Look at the time. This is the news. So inside this 15-minute range, we have the longs here, and going to the underlying liquidity, which will be here. Look at this also. What do you see in 1 hour? Here. Another pending range, aiming the underlying liquidity. So really easy longs for today. Okay. Also important, here I took that long on USD-CAD. Why? Because we have ready statement. So intro rates on USD-CAD. Let's check at 8 hours. Look at this beauty, and look at the time it will create the lower low. At the exactly 9 AM candle, but we need what? We need to create a 1 hour pending range. So from here, we want to go long below the 8 AM range after this happened. So from here are our longs. And where is the underlying liquidity? It will be here. Here. Why exit here? Because it was creating new 15-minute candles until this happened. This one. And look at this. Every single time it creates a higher high, I was placing my stop loss below the candle, and finally open above and exited here on this candle exactly, which was the high of the, well, not of the day because it went higher later, but came back to my entry and then boom. Why low hanging fruit objective? Only 25 pips for intra-rate, because remember my down liquidity was complete, which was this 1 month range here. Perfect. So let me delete all of this and let's start for first of all, I also wanted to remember this one. A lot of shit here. Holy God. So also when trading a correlated asset, CAT, and look at this. So we have already the bias for the news. For IM, look at this. We have this bias, but didn't take the liquidity before the news. So where are the news? Here it creates a 15-minute pending range. Look at this, and going to final liquidity. Sorry, final liquidity. Meaning what? It will go up on USD-CAD. Perfect. All right. Once that's said, let's start for the episode of today. It will be the London kill zone setups. It will be really similar to New York kill zone setups. I don't want to say the same, but it's just a small difference. So, as your surprise, we have a range. As always, let me make it more realistic. All right. And there we go. Okay. So as always, this is our range. And when I say London setups, it's not about this is the Asian range, turtle soup, and go short 10 pips above, wait for a fair value gap here, after the market shift structure, and then lower. No. To me, this is fucking bullshit. I don't subscribe this kind of models or setups or whatever you want to say about this bullshit. We are trading candles. We are trading the range expansion, remember. The benefit is that we already know. All right. We already know when the new candles will print. Meaning what? We already know which time frame will be the expansion of the candle. Meaning, for instance, for hour, we are trading the 1 a.m. candle, which will be London, the 5 a.m. candle, which will be London lunch, and the New York open. The 9 a.m. will be New York, and everything happens exactly the same. So for instance, going to 8 hours, this will be full London and London lunch, and 8 a.m., which will be the London open. This will be the full Asia and London. So having this, we already know when the expansion of the candle will be. So let's go to the first setup. Really simple. The most simple one. So imagine this is, let's say 4 hour, let's say 6 hour, 8 hour, I don't care, I don't know. I mean, when I say this is the range, this candle. And now imagine this is the London candle. Meaning that this will be London lunch or going to New York. So if this happens, we already know the bias for New York. That will be, in this case, a reversal. If London went like this and 5 a.m. Sorry, this is 5 a.m. So if London went like this, we already know we want lower the time frame pending range or SMT or failure swing, which is exactly the same. And we have the bias for going into London lunch in New York. But also here, because we are trading this candle, not this one, this will be on the next episode on New York setups. Because we are trading this candle, we want to see something like this on New York. If this is 1 hour, we want to see this in 1 hour. This is the setup that we want to see. So here, we want to see something like this. Turtle soup, or SMT, or failure swing. What time? As you know, I don't like staying in this candle. For instance, at 3 a.m. we'll make the turtle soup. And then is time to trade, because this fails not every day, not every single day makes the turtle soup and expansion at the same time. We want to see the candles that are talking to us, meaning that if the turtle soup happens at 2 a.m., we don't need the 3 a.m. candle to come back and make another turtle soup, because the turtle soup is already done. I mean, this to me doesn't have any sense, because the turtle soup is already done. We also remember the failure swing episode. If this happened at 2:45, 2:50, 2:55, to me this is already the 3 a.m. candle. So the 3 a.m. candle looks like this in my eyes. So it will be something like this. Okay. And going into 5 a.m., it will just open. Imagine this is the 4 a.m. and this is the 5 a.m. It will be this candle here. Okay, really simple. So we want the turtle soup from one of these candles, and this will be the 5 a.m. London lunch. Okay, here. So this is the most simple setup, but it doesn't mean that simple. It's not what happens every single day. Actually, this is the, I would say, the most common setup. Okay. So let's see some examples. What I would do if I was you, it's going, because I was watching the June and July charts to make this episode, but you can go, for instance, to April and May and find every single day which setup happened, and not watching the setup like this, watching the setup in 4-hour time frame, and you only have two candles. For instance, this one, you see? Sorry. Here, what do we see? If this is Asian session, this is London, and this is New York. So let's see here. Not only 4 hours, but maybe if you go to another time frame, you can see, look at this, something interesting. Look at the time that the turtle soup is done. You see, 4 a.m. Look at this is an inside bar, so turtle soup is done at that time, so we already know the 5 a.m. candle will be expansion candle going into new this high, for instance, because we look at this 8 hours, so this will be the liquidity for the day, and here happened. Okay, look at this is a pending hour, really simple, right? So the first example will be on you. Okay, and look at this. Isn't it exactly what I just said? What do we see here? Look at this huge candle. It is activated here, and this is the liquidity for New York. I will try just focus on these two candles, which will be London, because this will be about the next episode. So this is London. So if we are in a bullish range, doesn't mean that we can go short. No, look at this. So as you already know, going into lower time frame, what time is this? 3 a.m. It makes the turtle soup. When it's exactly the same price, you can see here. When it's exactly the same price, this is because of the broker. So maybe in FXCM or Rwanda or whatever, this high looks like this. So to me, this is a turtle soup, and look at this, we have the bias. And we exit here? No, we exit here and look at the time, 5 a.m. So to me, this will be the exit. But going step by step, let's see, let's refine our entry. So what do we see here? So 255, we wait for the next candle to open, that will be the new hour. So at the new hour, we want to close below and inside this 15-minute range to go short. Look exactly what happened here. So as soon as the next candle opens, power 3, and it's over long. Look at the Look at the wick touching the order block exactly. So where is the bias? Bearish. But we're exiting here. 9 pips, no. What time is that? It's a new candle, it's 4 AM. So as soon as it breaks this low, meaning that it creates that turtle soup, we can exit the position here. This is our first exit. Where will be the next exit? The 4-hour time frame, new 5 AM candle. Here open 5 AM, so as soon as it creates this low, we have another exit opportunity here. Okay, so in this case I'm over. It's over for the trade. I don't care if it goes lower because the range that is leading right now is this one. And look exactly what happened on New York. Look at this. Remember, when we complete the liquidity, we need a pending range to start and the next movement. And it's exactly what happened 1 hour here. Look at this. It completes, but we want a pending range. Here starts a 4-hour candle, and look at this pending range going into the bias. Probably we have some 4-hour candle here, and finally here. So, okay, so let's go to the next setup. It will be on GBP. I think it's exactly the same day. I don't know for sure. Here. Oh, sorry, the next month. Quick. Okay. Okay. 3. Yes. Well, okay, it's here, sorry. Second. I think. Yeah. Look at this. A really similar setup. In this case, the range is on, look at this. We have this 8-hour range. Look at this candle. This to me, it is inside. Look at this. It's almost inside, so it doesn't need to be perfect because this is 8-hour candles, and the difference between being out or in is not even a half of the pip. So this is the range going into New York. But what do we see here? A bias, and probably maybe a partial. So which candle is this one? Okay, so this is 3 AM, but I don't remember if there is some important. Maybe this one. Let me check. So maybe it's not this day what I was. Even that is really green because we had the drop. Okay, yeah. So this is daily chart. I remember that we have this 3 days range, which this will be also the bias, and the liquidity we can refine into 1 day, and this is the turtle soup. It happened on London. So here are the best long entries, the best opportunities to go long. And look at the time, it's London. So it doesn't mean we can go short, no. Actually, we had this range that completes before London. So when it completes the range, you want a pending range to be created. So in this case, it's better going short here or wait and go low, higher. So as we can see, it creates what? This is a failure swing, meaning that to me this is a range. Look at this. Look at this. 30-minute range. Perfect. The best longs are here on the order block here. We don't see, but going into 15-minute, let's look at this here. While we are inside the 15-minute candle and 3-minute candle. So as soon as this one close above, we're still on London, but look at the time. It's almost 4 AM, but look at this, the turtle soup is already done, and we have done the turtle soup of high time frame range. Meaning what? We don't need to create another pending range. Why? Because the pending range is already done, because look at this is complete and this is the pending range. So that will be an intra-turtle soup that we don't need. Meaning that these are long, but we are not going out. Well, it's 3 pips, so we can exit here, but this is the final dragon liquidity. Let's see if it doesn't complete on this day, meaning that we have the bias for the next day, and exactly what happened. Really simple. Actually, this is another setup that I will comment later. Let me write it if I don't have. Yes, I already wrote. So this setup, it's really clear, right? So this one. In this case, it's better trading on New York because we are trading expansion, not the turtle soup, but we can trade all the single moves. Okay, I'm going to explain now the best when this happens is the most simple London setup. We're still on this kind of time frames. Imagine 4 hours. In this case, this is a 4-hour range. This is Asia, and this is the London Open, right? So remember, if we are bullish here, where do we want the support to hold? So we want the range low of the range that is creating our, the candle that is creating our range. Well, we want the range acting, the range low acting as a support. So when this happens, it's perfect. This is the classic setup of AMD or Power 3 or whatever you want to say. Look at this. This is Asia. This is the manipulation, and this is the distribution. What is this exactly? This is a pending range, right? And this will be optimal entries in case that this happen here, and this is the 1 AM. So it will look like this. If it's something like this, and this is from 1 AM, it will look like this. Which to me, this is even better. It doesn't get any better than this. Because you already know that, because you already know how it closes the previous candle. So you already know that this movement, it's everything fake. It's just to make an intra-turtle soup. And what are we waiting to expect something here in low time frame, this. We want a pending range in 1 hour. For instance, that will be 2 a.m. or 3 a.m. and easy longs. If the 1 hour candle closes like here, we already know that 5 a.m. will complete the movement. Okay, will complete, and then we'll know if when it completes it reverses or it keeps going higher. We exit here. We have to exit that we already know. Here, when the 5 a.m. candle opens, but in this case, unfinished job here, so we can exit here, and imagine this is now the 5:55. So we want the next candle, which will be the 6 a.m. to open and go out when it makes a higher high. Okay, it's clear. So let's find some examples. So let's go to USD CAD. Let's go to clean chart. All right, so the day is 2nd of July. The trade I took, I think I already commented. Okay, so look at this beauty. So going into 4 hours, remember, look at the time. This is the 1 a.m. candle. Look at this is a fair swing. But we can change the time frame to find something like this. This is an interturtle soup. This is our bias, not driven liquidity. It's our bias, bearish. This will be our final common liquidity. Okay. So going into 1 hour, look at this. This is 2 a.m. So from the end of this candle or the beginning of this one are our shorts. Why not here? Because this is still Asia. I didn't trade at that time yet. It doesn't mean we can trade this, but it's simply that I wake up at the beginning of this candle and I go for one of the charts in one of two candles between 250, 50 and 30 more or less is when I go into the charts. So remember, I already commented that one, but I shorted here on this bearish candle. So here, and stop loss is safe in one of the range high here or here. This one is alright. So we already know the 4 hour candle expansion. So this is the 1 a.m. So going into 5 a.m. it will be still bearish. So where we can exit? Look at this. It's not even at 20 pips, so we can wait going into New York. What is a good exit candle? The 10 a.m. Here. This was my exit exactly. Oh, sorry, it was this one. This is at 10 a.m. here, and if you can just take some partial here and let the trade run. Look at this, it fails to create the lower low, so for the next day, what do we want? Continuing lowers. Really simple. Next example on GBP on 3rd of June here. So what do we see here? Maybe in 8 hours. Look at this. So nothing here. Yeah. So the context is we already complete this 12-hour candle. Look at this, how perfect. So from here, reversal. But look at 1 day. On the range, this is still the trend liquidity, so we just create a pending range to go higher. Another really simple, not only 1 day, but 1, 2, 3, and look at how it closed this candle. So we already know that the next one it will make a higher high, and look at this, create another range. So going into what I was trying to say. So which is the setup? What do we see here? This is the 1 AM expansion. So we're trying this candle. So the turtle soup already happened on Asian, but look at the distribution. It's almost close to 0. So we expect another turtle soup here if the turtle soup is already done. And look at this. We have an intra turtle soup. We expect something like this. No, this already happened on that candle. So in the next candle, we just wait for our expansion. And what happened here? It failed to create the complete this range. So as soon as it creates the lower low, we can exit here, and it creates another candle, so we can go long and blah 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 blah. Easy, right? But just focusing on London, what do we see here? Which candle is this one? 3 AM. What is this? A failure swing and probably an SMT with EU, XY, or whatever. Meaning what? Meaning that we trade that week. So look at this range, turtle soup, and failure swing. So when this happened, we already know that all of these are shorts. For instance, short, short, etc. Right? Everything is shorts. We are not fearful to something like this. This already happened here. So we just expect the distribution. We exit here. No, look at the time. Almost 5 AM and the objective is not done. So we can exit here. It completes. This is a good exit. And probably this will be a good exit too. You can improve that exit. No, you can. Every exit is an entry. Sorry, I was still in the chart. Every exit is an entry, so like this, and going into New York. This is a surprise that the news are bullish. I don't think so. Okay, next scenario. Another example. 6th of June. All right, so this is 6. Maybe there's a okay. We have that range. So we don't need to complete the range, but we have the bias. And look at this. So if the turtle soup happened on Asia, we know that the next candle expansion will be in London, the 1 a.m. candle, going into the down liquidity. Here we can refine and look at this beauty. So 3 a.m. and look at also where we at. We want the range high to act like a resistance. So as soon as it creates, look at the time, 55 and 3 a.m. turtle soup. So shorts. Let's see order block here. Short. Okay, now bias is complete, but it's 12 pips only. So we need this. No, we doesn't need this. Why? Because our exit could be the 5 a.m. candle. Well, actually, this happens at the 450, so it's a red flag to still go in the shorts, but let's trust. Look at this. We can trust, but because the liquidity is lower. Look at this. This is New York news and open below. So when opens below, it needs to restart this range, and when it restarts, low hanging fruit objective, that will be one of these or this will be a range. This high, when it restarts, we just keep going lower. So going to the next day, I don't know what happened next. Maybe it has created another bullish range. Oh, so we have new. This is NFP, and this is just intact down liquidity. So we already know the bias for the next movement. But we are not holding the trade till here. We are exiting at 5 a.m. candle. I mean, we don't need to exit here, but look at this. 8 a.m. with news, opens below, so the stop could be something like this. And we went long, we went short here, so 3 hours, it's more than enough, okay? Next. Let's make the last example of this setup. 11. Alright, so look at this. So this is the high time frame range. So we will look for longs. Now in the context, the 11th, but this we don't need to complete this one. Remember, in this case, in a bullish range, when it opens below, when it opens above, it needs to restart the range, right? But remember, as soon as it creates a new range, it will use it to follow the trend. So we were focused on this one, but when this one opened, this is the one that we trust. Okay. And so what happened here? Well, actually, this happened in New York. The trade on London will be here. Remember, opens above, so needs to go here. And then when it's restarted, we can go long. Okay. But this is not the setup I wanted now, but we don't care, we can trade, of course. So look at the time, 2 a.m. big distribution, but look at the wicks where are stopping. The daily range low acting as a support, and also we have what? We have this, and we have turtle soup. So where are our longs? So imagine this is turtle soup, first long opportunity, second one will be our fringe side of the range, second one, and then let's wait a close above here and look at this candle. This is the 15-minute order block here, and okay, so that will be an easy 20 pips, so more than enough. So as we said, so as we saw, we have news at 8 a.m. or 8:30 maybe. But this need to restart. Oh, sorry, no news here. So when this restart, so maybe these are longs going into the liquidity. And this is what happened. Yes. Okay. Now let's see low probability conditions. Let's change and let's find out. Let's draw a very setup. So imagine now that this is exactly the same. This is the 21 Asian session, and this is the 1 a.m. London Open. So imagine this is already done at 2 or 1 a.m. Okay, so the range is complete, and there is no clear range, or there is a range, two ranges that are contradicting each one. So when this is already done before the 3 a.m. to open, we can expect something like this. This is now 1 hour candles. This was the 2021 and 1 a.m. and this is now 1 hour candles. So this could be the 3 a.m. This could be 4 a.m. and maybe going into New York. This could be 5 a.m. and something like this. Okay. So a red flag is when the range is complete before you start the session. So let's see some example of this also. July. Okay. Let me clear everything. Well, that's clean. And wait 8 hours. Okay, yeah. So look at this. So we have this clear range. And look at the time that it was complete at Asian session. So in London, even that you have here a good expansion of 20 pips, opening below at 3 a.m. and 4 a.m. I mean, it looks like consolidation, you see? And when you see 8-hour chart, look at the candles. It completes and rangy. This is 8 hours, so in 8 hours only did this. And going into, I think this is New York. Yeah. And going into New York, it makes the movement, but we're focusing on London now, so till here. You see? That's everything that happened in London. Nothing. And remember, everything is fractal, so if this range was 4 hours, so the 1 a.m. candle would look like this, and 5 a.m. candle would look like this, and probably the next 9 a.m. candle would be the one that will continue lower. If this happens on 1 hour, so this could be 2 a.m., 3 a.m., 4 a.m., and 5 a.m. continue lower. Everything is fractal. This case is a case that is a red flag to trade. Okay. It doesn't mean we can trade, but it could be difficult than the previous setups that I said. Right. The next one will be a sequence. A sequence is what? Sequence is something like this. I'm gonna do freestyle now, but imagine. This is 1 hour candles. This is the 2 a.m. At 3 a.m. it makes the turtle soup. So we have the bias. And probably we have some dough here. So we want to go lower. Our shorts will be something like up here. So we already know how the next candle will be. Lower. But look at this. Is this complete? No. This is what also a previous candle because it didn't reach the liquidity. So the 5 a.m. candle could look like this. So now this range is complete. But what happened next? When it completes, we want a pending range to be graded and then go higher, right? So this is 6 a.m. We have the pending range or turtle soup or failure swing or S&T, whatever. Here, you already know, right? So you already know the next candle. And now we have created a range. The 1 a.m. candle. This is 4 hour. So the 1 a.m. candle looks like this. This is the 5 a.m. candle. So this is the sequence. When we don't need a high time frame range that are telling us a story, because just focusing 1 hour, we know how. So opens above, so we want to go lower, is the bias. What will be the next candle if it closes below the range? So at least we want this to happen. That creates a lower low. If this happens, we want a lower low. So this is 5 a.m. So this is a good exit because it creates another high time frame candle. So if this is a good exit to reverse, that means that probably we have some intraday soup or new candle exit opportunity that will be 6 a.m. etc. So another good exit or another entry here. Good entries. Imagine this is 7 a.m. and the down equity it is not reached. And imagine we have news at 8:30. So what we can expect something like this. In this case, this is a restarted range because first went higher, counter trend to the down liquidity, so it needs to go lower. And we can find something like this in 5 minutes, a pending range, and then the news driving us to the down liquidity. In this case, restarted range. In case that opened below, this is a pending R, so we can refine this candle as a bias and final down liquidity. In this case, this is how it looks like in 5 minutes. If the down liquidity is not reached, exactly what happens today, this is bias, and reach. When it reach, it can create something like this. So range done, meaning what? Reversal. And that will be 9 a.m., 10 a.m., new 4-hour candle, and something like this. This is what I was saying. Actually, this is exactly what I say on my live trade. I draw something like this, going into the today range low, and I sold again here. I'm going into here, high time frame range complete and reversal. So let's see some examples of the sequence. Alright, so I just wanted to make sure that the audio is okay. So let's continue with the video. Okay. So on 10th. Look at this. This is exactly what I just said. Look at the candles. We don't have a clear range here. Okay. You don't have anything. So we are only focusing on low time frame ranges. So look at this. this 3 a.m. So this is not silver bullet and that bullshit. 4 a.m. opens above. So where is our next liquidity? Here. But this is not the new candle. It will be this one. So here it is a good exit. It depends, of course. Yeah, it's almost 20 bips, so it's a good exit. Maybe we can see something like this or this. 55 here. So as soon as it creates this range high acting like a resistance. So easy shorts here, and the other log will be this one. So that is it breaks this candle. So as soon as this opens, this is short, going to here. We can exit here. We can exit on this candle, but maybe we can refine to the next 6 a.m. candle. That will be this one. So this could be our second exit. And remember, every exit is an entry. So this could be an exit at the new 1 hour candle, aiming here. But if we enter here, we don't exit here. We won because in this case already created an R, while we don't have any R here. But in London, it created a range move, meaning that probably this is a range. Let's see some beautiful. Oh, it's not really green, to be honest. Well, we have this one. Yes, this one also. We'll just focus on that high. That high would be our exit, which was also the London high. So what is the new 6 a.m. candle here? So good long opportunities and good exit from our shorts and going long. The new candle is here. This we exit here. No, we don't need to exit here. We can exit here. So this is not the beginning and not the end of the candle, so we can just place a stop below here. It makes a higher high, so we place a stop here and got stopped out at profit here. And now look at the time, 35 and 10 a.m. creates a pending range. So the pending range, it's probably this candle. These are the longs. So you see the cycles, right? You don't need a high time frame range. Just focusing in what 1 hour range is telling to you, you can just make your trading so simple. Okay, another example. When we have a really clear range, something like this. When the range is really clear, it will probably do something like this. This is a turtle soup. Imagine this is a 12-hour or daily candle. That could be, 6-hour or 4-hour the turtle soup. And this could be 2 hours or 1 hour candles. That is going up, up, up. And what? Remember, we are going into the last quarter. We expect this to happen? I don't think so. Why? That was so clean. Not even a single turtle soup in lower time frame. So what do we expect? something like this. That could be a restarted range if it opens above, or it could be a really easy pending range if it opens first below and then going higher. When this setup happens, you already know, you have experience on the markets, that the bigger move will happen on New York. Why? Because most of the time New York is where the news are. So this will be probably the 8:30 move going into the ground liquidity. So what do we expect on London? A fake move. A fake move doing what? Restarting or creating the turtle soup of the pending range going into the ground liquidity. This is not a short opportunity. If it opens above, if this happens, this is not a short opportunity to go here. No, it will go here and then up. So GP on 10th of July. I hope this is being clear. We don't want ABC setup because this is a pattern. You don't want to be a pattern trader. You want to understand the markets. Okay. So what do we see here? So this is a clear range. I think we had SMT on you. I don't remember. In case that we don't, this is just a fair swing. So to me, it looks like this. Look, it tried to make the high at the lower low here, and it failed. See, first round liquidity and second round liquidity going into New York. So this is London. We want London to be that easy? No. Look at this. 2 a.m. The 3 a.m. opens up above. And look at this. It fails. So when it fails, we already know the bias, but it doesn't mean that it makes just a bit retracement and we go long. No. Opened above. So this is our neutral liquidity. But we have two things here. First one is that we had SMT with EU, so to me this is complete. In my eyes it looks like this. So the 1 hour range is restarted. But second one, we don't need this. Remember, when we are going counter trend, we use this one until a new candle is created. A new candle meaning a new range. So when a new range is created, we have now this one. And where are our longs? Here. Look at the time. 3:55, but it makes a higher high and breaks lower. This is already the next candle. Look at this is a free swing. So that could be, for instance, I don't know, this another lock and longs inside the range. And going into the round liquidity, but this is only 6 pips. Remember the next one. And easy. So next one, USD CAD. Go fast. Second. Okay, this was this week. I remember perfectly. Remember we had this 1 month liquidity, right? So when we are in the last quarter, which is this one here. Look what happened. Look at this. Here, well, actually, look at this beauty. Okay, so this is a clear range, right? Aiming the down liquidity, which is this one. But look at this. We need to restart this one before going higher. From here are our longs. What I say, most of the times this happens on London. It makes the retracement, and then New York the continuation higher. Look at this. What happened here? It fails, so we already know that this is just a retracement to do higher. By the way, this is the trade I took, but my focus is here now. So where is the candle that we are trading on London? The 1 a.m. So this one. So opens above, and this is 3 a.m. This is a turtle soup. So let's find an entry. Like this. So we want to break below and order block. Okay. So low hanging fruit objective. We want more than this, or the new 5 a.m. candle open. This is 5 a.m. now, but look at this shit. It's not even 10 pips, so we want to hold the trade here. Look at the time, it's the new candle, it's 7 a.m. So in 1 hour, we have a range here. Maybe we can refine 15, 5, yes. Let's try to go long on, well, this is actually New York, but let's try to go long before breaking this high here, the next power of 3. And we exit. By the way, everything is longs. We don't exit here. Why? Because we are so close to the down liquidity. So just let price do its magic. Done. Okay, let's find out another example. GP. Okay. Clean R. So let's go to lower time frame. In this case, I think we had some SMT here on EU. I don't know if it was this candle that made the lower low. I don't remember. But look at this. We are not on the last quarter, basically, but because this was the CPA day and we were on the first quarter. So what we expect is just to higher resistance liquidity run, and at the half of the range, just low resistance liquidity run. This is advanced, but you don't need this. So what do we see here, and what do we see here? This one is a, if I remember, yeah, this was the GDP maybe, or CPI, no, GDP of GBP, and open above, going counter trend. So when opens above, going counter trend, the take profit is low hanging fruit. Look at this, and also look at the time, 3 a.m. So 3 a.m. in this case it fails, so this is a failure swing, and probably also some SMT, but we don't care. Failure swing and going. So you know, as soon as it restarted, needs to create a pending range, which is the failure swing. So here are our longs. Longs, 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 etc. Longs. So going into what's happened here, going to New York, opens below. And look at the time, it's 5 a.m. So we can go long. We're getting closer to the news. We are not scared. We're not fearful here to the classic ICT pattern. No. This is a new opportunity to go long, actually. And well, another example. So which was the R? I don't remember. Maybe this one, I don't know. Exactly. So we're inside this one. The turtle soup is done here. This is a failure swing. This is probably a restarted range. Maybe it opens above and needs to restart here. And look at this. When it restarted, low hanging fruit objective. This is also the range low. So, well, this is actually the, I commented this one at the, not the first, but second model, remember, easy. But we are focusing now here. In this case, we don't have any turtle soup. When this happens, just see a correlated asset what's doing. Third. Third. Yes. Well, this is actually New York. But look at this. We are using this one. No. As soon as it creates a new pending range, it will use it to go higher. When it creates a high time frame range, what we want to see in lower time frame? Another pending range. In this case, a failure swing with SMT with XY, I think. If I'm not wrong. So this is our entry is going long. Look at this. This is our order block. Look at the time. We can trade from here, more or less. So in this case, because there was news at 8:15 and 8:30 here, we can just go long as close as possible to the news. And this is also an SMT here. You see, 8 a.m. Remember, here and here. So longs here and longs here. Going into the final drawn liquidity. Yes. Remember that this date fails, so we already know the bias for the next week. And let's complete this R. Okay. And if you see the big image, you can see exactly the same here. You don't want to see something like this clean. In the last quarter, we want to restart to create a pending range. Maybe in ForexCon. I think this was a SMT here, and finally completes this one. Okay, this model is clear also. And let's see the final one that it's more common on New York, because this depends a lot for the news, because it's a consolidation before the move, but it could also happen without news and in London. It could be something like this. Well, actually this is really similar with the second model I said, which is to be AMD scenario in Asia, Tardal sub or manipulation on London Open, and higher. So let's see. The example happened this month also on you see the range low acting as a support and changing the state of delivery, and the 1 AM candle is this one, is the one we trade. We also have an intra-tardal sub. So we expect a lower time frame pending R or failure swing at 3 or 4 AM, in this case at 3 AM. and easy longs. This is not the drawn liquidity, but this one, or also the 5 a.m. candle. Here 55 and exit here, something like this. We are always aiming for 3 hours. That could be a scenario. You can exit here at 2 hours, or you can just leave the trade to run. And finally, okay, this is also a good example of what I just said before. It doesn't go like this. No. In this case, opens were above. It is opening above. So we want to go short, then low, higher. I don't know if it is a bit better. Yes, we can refine a bit. In this case, is also restarted R. So as soon as the news made the lower low, here is a buy and going into the. Also, this is a long because it is the last leg, and it failed to create the higher high. So it's the longs, and in this case we are just aiming on 1 hour. We can aim for 3 or 4 hours here, and also 4, 5, 6 are here because we are very low of the hour. Okay, so I think what I wanted to say with this episode is that don't be a pattern trader. Understand hours, understand the narrative of and the context of the higher time frame hour, what it's telling to you, and just finding the lower time frame hours, how it's opening, above, below, going counter trend, creating a pending range, depend of the time, depend of the candle expansion that we are trading, if it's 1 a.m. or 5 a.m. You need to be smart and be aware of what the market is telling to you, okay? So thank you for watching, and see you on next one. All right, this video will be regarding the New York setups, okay? So it's really similar to the London setups because the candle formation is just the same. I mean, there are multiple ways to create the range, but it is always exactly the same. We only have 2 possibilities: to activate below, then higher, or activate higher and then go below. What happens in between, this is what changes from one range and another one. Also could create just an intra-turtle swoop or a failure swing. It can create a turtle swoop failure swing. This could be slowly or faster. It can fail and create a pending range or a reset R, but it is also the same, okay? Okay, so let's start with the setups, okay? First one, the most simple one. So this is the basic. That will be the classical three candles formation, if you want to say it like this. And in this case, let's say this is a 4-hour chart. It could be just 6 hours or whatever you want. 8 hours, I don't care. It works exactly the same. For instance, in this example, it will be 12 hour, as that will be London. The 1 a.m. London expansion, and then the 5 a.m. New York expansion. So in this case, in this video, we are only talking about this candle, the London setups, the London expansion. Okay, so there are multiple possibilities. Or something like this, but we don't care what happens next. We just want this down liquidity here. All right. So these are really easy setup to find and to recognize quickly. So just let's go to find some examples. First of all, going to Aussie dollar. Remember, this happens on every single asset, every single pair, every single day it will happen. I don't care if it's crypto, if it's Forex, if it's gold, if it's Nasdaq, I don't care. It works every single day with every single asset. So let's go to, sorry, option. All right, so look at this. I don't know if it's this one or this one. Let me check. Okay. Actually, because this is also orange, so okay, we don't care which one, because the liquid is intact in both cases. Okay, so what do we see here? We are in the last quarter of both ranges, here and here, you see, and let's find a long entry. So in daily chart, we don't see anything. This range is already complete. Here it failed to create the pending range, so we are already up here. So going into 12 hours, look at this. We have the liquidity. We don't need to create a into turtle soup because the turtle soup is already done and it fails here. This is the 5 AM candle when New York starts. So we are trading this candle. So in this case, this is because we are in a 12-hour chart. This will be Asia and London, and the turtle soup is already done. So this range is activated. This is our bias, not the drum liquidity. We are not living here. We're living here, and maybe this is the next one. But this is our drum liquidity, the most important one. So let's refine an entry with lower time frames. We see exactly the same here. Why this candle fails? Remember, last quarter, as soon as a new range is created, here, we don't need to complete this range, and we will use this one to our range to go to the liquidity. Refining 6 hours, this is a failure swing. And look at this. I think, yeah, 3 hours. Look how precise it closes inside the range here and makes the turtle soup, and at 5 AM fails. Let's see if there is some SMT on the correlated asset, which is New Zealand USD. I don't know, I don't remember, to be honest. So, which will be an extra confirmation that could explain why at 5 a.m. didn't make it into the turtle soup. And no, also failed here. So we just a failure swing. Look at this. In this case, the low was created at 4 a.m. So this is the reason that it doesn't need to make the lower low at 5 a.m. Let's see also at which time. Exactly 4 a.m. So at 5 a.m. it tries to make the lower low and it fails. So this is a failure swing. So in my eyes, because it tried, it looks like this. So when going now to the 4-hour chart, you will see it in the turtle soup with this range, which is the pending one. Look at this, beauty. So, which is our entry? The New York setup starts from 5 a.m. candle here, but this is not New York yet. New York starts at 7 a.m. What happened this day? That we had news at 10 a.m. Look at this. So, how are we trading this? Remember, the turtle soup is already done, and we are trading the 5 a.m. expansion. But look at this. It is 9 a.m. here. This is the low of 9 a.m. You see? This one. I don't know why. I don't know what's happened. I know. Okay, so this is the 9 a.m. high. Sorry. Because the 9 a.m. starts the candle. So this is the 5 a.m. expansion high and looks how it failed to complete this, and this range. What does it mean? That the 5 a.m. will be longs, but going into the new 4-hour candle will still going longs because we are at the last quarter of every single range. Here and here. You see, and you see. So this is not a short opportunity. This is not in lower time frame. Turtle soup and market shift structure, and this is not our short, of course. Never. What do we see? Another high, sorry, another long opportunity. Going long into the final down liquidity. Look at this, it failed here to complete the second round liquidity, so as soon as this candle opened, this is also a long opportunity. Just timing 1 hour because we are very late on the movement, so if we open this power of 3 and we are aiming to 1 hour, this will be our stop loss, exactly the same, 7 pips. And now you can play just you stop following price, for instance here, makes a higher high, and we are just placing the stop above every single time. Okay, so this is the most easier setup, let's say, which is the classical 3 candle formation, and we are trading the expansion one because the turtle soup is already done. Really simple. So let's find another example, which will be on GBP. Here. Look at this. So look at this. I remember this one. This is a 90-minute chart where inside this candle, look at the voice closing inside. So this is the candle that is being respected in the range. The range that is being respected all the time, it is not the higher time frame one. It is the one that is on the left. You see there is nothing on the left here. And look at how the bodies are being respected every single time. This is okay because it just closed it. I mean, we need to zoom in to see that it's not closing inside. It's not even a pip difference, okay? And the range is, sorry, it's 40 pips. So it's not even a 0.25% of the range, okay? So remember, it is a down liquidity, and this is what happened on 4-hour chart. The turtle soup is already done in London. We are not focusing on trading London on this episode. We are just looking from the 5 to 9 a.m. I mean the two candles, the 5 a.m. to 9 a.m. and the 9 a.m. to 1 p.m. So now let's go to lower time frame. Look when the turtle soup has been done. Look at this. This was done at 3 a.m. but we are really close to the low and going into the new 4-hour candle. What do we want? Into the turtle soup in this case. Also, what do we see here? The bodies are being respected at the high. I mean, this will be another range created. So in this case, we need to restart that range, then go higher. Remember, before making a new movement, in this case is a lower one. When it's done, we need to create a pending range, then go higher. And it's exactly what happened. It completes, I don't know which one, maybe we have something like this here. Exactly. So once this one was complete, it needs to create another one, a pending range to go higher, and that's exactly what happened. All right, so this is an intro turtle soup that happened at 6 p.m. in this case. So this will be just a failure swing that look at what is respecting. This is a lower range of 90-minute range. So this is a change in the state of delivery, so it doesn't need to make the lower low, and it creates a 1-hour range in lower time frame. This is already New York. This is 8 a.m. Our longs will be inside here, the first ones. And going into lower time frame, what do we see? This is an order block. So everything here is our longs. And is this our down liquidity? No, this is our bias. We can take profits here. Actually, we must take profit here. Why? Because it's a 20 pip movement. Look at the time that is created. It's the beginning of the candle. So this is a exit opportunity. But it doesn't mean that we need to take everything out here. No, it could be just a partial, and you can just let a runner going into the final 90-minute range high. And that's exactly what happened. Complete done. This is our final exit. Look at the time. New candle here. Yes. So this is a new candle. So we can exit once this is complete. If we can refine even more, we can exit at the higher high, but with this difference, which is 1 pip, and we went long something like, I mean, it doesn't need to be as precise like this, but imagine we went long late, I mean here. This is 30 pips move with this, which is more than enough. Okay, so this was the most simple setup for New York. That is the reversion one, when the turtle soup is done at the 1 a.m. candle or in this case happened at 5 a.m., but it happened at the beginning. So we already know that the expansion will be during New York. I mean, in this case, this is not the setup. It is this one. But for the times, the expansion will be in New York. Okay, that's exactly what happened here. So real simple. Okay. Let's see. So because okay, another setup. That could be confusing, so pay attention to this one because this was the simple one, but this is not that simple as the first one. It can create confusion, okay? So listen carefully to this one. Okay, what do we see here? As always, this is a 4-hour, 6-hour, 12-hour range. It could be also a huge 1-hour range. I don't care. It's just the candle of the left. This is the one that is being respected now. So you would say that this is the down equity, right? I agree just looking at this, but if we see the big image, maybe we have something like this. Okay, so where is the dragon equity now? This one or this one? Think. Okay, the answer is this one. Why? Why price doesn't need to make that low and then go higher? Because this low is already activated. So we don't care that it's this range is being respected. I mean, we care until, remember, a new range is created. Why? Because this is going counter trend. And the final down equity will be just go again to this low, which is already activated. So this is our down equity. When this range will be disrespected, when a new range here at the New York candle in this case will be activated. And look at this example, we see something like this and this, right? So this is the candle, and now this is being activated. And something like this, for instance. Here, look at the height that is not taken yet. So this is the one that will activate the pending range going into the final down liquidity, and this will be the move. Why this is a consolidation? Look at this. So this is a classic scenario when there is important news in New York. I mean, if this is 1-hour chart, this will be 5, 6, 7, and 8. 8:30. It makes the there is the news at 8:30, or maybe at 10 a.m. depends of the day, and it's consolidating before. So when there's news, it creates the fake move, let's say, and going to the down liquidity. And let's see a clean example of this, which will be on USD-CAD. 5 of June. Okay. I think it was 6 hours. All right, look at this. This is our range. Regarding New London, this is the range that is being respected. But look at this, nothing here. In 2 days, what do we see here? The range on the left is the one that it's being respected. It's the one that is leading price. Maybe we can find a big one. No. Well, yes, this one. See? Let's make it orange, for instance. Okay. And then going to lower time frame. So this will be our drawn zone liquidity. We will focus only with this one. But there are two things that you have to see now. First of all, it's if we are going higher, if this is the real drawn liquidity, which is the, how long could price go lower? Which is the real support? The range lows. Look at this. Look at the voice. You see? This is the most stronger. This is the most stronger thing that you will see price here soon. Look at how it's being respected. It's telling to us it's not going lower. It's not going lower. You see this market shift structure, failure swing, whatever, and bullshit. This is the drawn liquidity. Look at how boys are being respected. Regarding the weekly range, it happens exactly the same. Okay, look at how the wicks just do the pain, but look at the voice how it's being respected. So we can just delete this one and focus on the weekly drawn liquidity. So look at this. Just focus now on this image. Which is the range that is leading price now? It is this one, or it is the one on the left, and aiming the drawn liquidity. Isn't the body still being respected? Let's look at this. So this is the candle that makes the news. So we can go into lower time frame, and what do we see? Here starts at 9 a.m., meaning that the news will be, now let's see the time. The news was 9:45. I think it was, I don't know if it was the CPI of CAT or interest rates or GDP. I'm not sure, but it was one of the important news about regarding CAT. Okay. So what's exactly what we want to see before the news? A fake move. What's doing? Create ranges. It's opening and went below. This is exactly the thing that we want to see here. So in this case, where is our longs? Look at the time. It is the end of 8 a.m. candle. So we want the next one to create the turtle soup of the 1 hour range. We want this to be created because this one is already activated. Here it was activated. So if this candle just closed a little bit above here, we don't care. This is not equal lows. It doesn't exist equal lows or equal highs. We just want this to be activated, this one. So for understand what I'm saying, imagine this is the candle, okay? So we are focusing here now. Where are the entries? First one, look at the time, is still far from the news, still 45 minutes left, so we are not going long here yet. Well, regarding news, you will see how to trade on the news episode, which is not the next one, maybe the other one, I think, but don't worry. So going close to the news, here we have another range. Now we are close to the news. Only 20 minutes, 25. So at 9:20 was the turtle soup, so we are trading the next candle. Look at this, power 3 inside this range. This will be our first long here. And which is the second one? We are not inside the 5-minute range, but we are inside this 1 hour range. And this is our down liquidity. Sorry, this is our bias. This is our down liquidity. Look at how many pips is this. 60 pips. Is there a difference if we go long here or here? 3 pips for 60 pips? Yes. So every time that touches again the order block, it is a long opportunity. Long and long. Okay. What is our exit? With the news, is this enough? 3 pips? To me, it is. Okay. So this could be a partial or full exit if you already have 3 or 4 hours. I mean, you could just aim something like this, 4 hours, and this is a really good trade. Okay, but we can, because the objective is not complete, we can just still going long, and we are not afraid of doing this. And this is our final target. Also look at the time, it is already a new candle, so we can exit at this one. If we can refine even more, we can exit as soon as a new high is being created. Okay, easy setup when you know exactly what happened, but if you're a pattern trader and just focus on the ranges that, I mean, if you are looking at the chart something like this, you'll see, okay, this is 100% the down liquidity. No, because you're missing something. You're missing the real range on the left. Okay. All right. I hope this one is clear. And let's find another one. So the next one will be a sequence of candles. It won't be a So what is a sequence of candles? When we don't need a higher time frame range or a huge range on the left, and we are just focusing on what's happening, for instance, on 1 hour candles. So which is the sequence? Imagine this is 2 a.m. Okay, so this could be 3 a.m. and opens and goes above. So now going into 4 a.m. or the same 3 a.m. candle, where is the down liquidity? This one. Imagine this is a 4 a.m. and it closed outside the range. So the 5 a.m. candle will be something like this. Right? Because we want this low to be taken because we closed outside this range. So this is now the 5 a.m. candle. Which is already the 5 a.m. expansion, which includes New York. So now this is a full range. The whole London, it is a full range. So what do we want here? We want something like this. This is very similar to the first setup I said. This could be, for instance, 6 a.m. and 7 a.m. Look at this. It's not taken yet, so we already know that the 8 a.m. candle will complete this range. And imagine we have news here. So maybe when a range is complete, remember, and we don't have a higher time frame objective or down liquidity, it reverses. And look at this. We have now this range here. So this will be our bias, and maybe in lower time frame we have another range here. And this will be our down liquidity. This is just a reset range, and we have a big candle here, which will be this our final down liquidity. And in this case, the target is not met, so we already know that the next candle will continue lower. So when a big range is complete, we just can reverse. So every time how the candles are being printed, if it opens and goes above counter trend or creating pending Rs, are telling us the history. That's why we are not pattern traders. We understand what price is telling to us. And when this range is complete, it creates a pending one. I mean, this range is complete, creates a pending one, and then we can go higher. Okay, understand the sequence? If we have a clear down liquidity, we need the lower time frame ranges to confirm the down liquidity, to open aiming our doll, okay? Okay, so let's find an example of what I just said. That would be on new 6th of June. On 1 hour chart. I think, or maybe it was this one. No. Oh, sorry, we are at the last year. Okay. So look at this. We start our trading here at 3 AM. Look at this. Opens. We don't know if it opens below or above first. This is 3. So here. Actually, I took this trade. But 3 AM opens above. So we already know that next liquidity is lower. So this will be our bias, lower. Maybe this is a range. Nothing here. So this is not a range because extremes are not being activated. So in this case, we are blindly following the 1 hour chart. See, nothing here. So what do we see? Bearish. Bearish, bearish. Here it's closing inside this range. But look at the time. 5 AM. We want this, the 5 AM candle expansion to create another range. So now our focus is here or here, meaning we want something like this, a new range, sorry, a new low being created, or a new high and then lower, right? Because this is the new 5 AM candle expansion. So it's going to find this low, but when lower and activates this one. So now we have a higher time frame range. Now we have bias. Now we have a down liquidity. And also what do we see here? This is a failure swing. Look at the time, 8 AM. This is probably news. Which time the low is being created? 7:55. Meaning what? To me, it's already 8 AM. So the 1 hour chart looks like this. So we already have the bias for the news. Why? We know that open and went below, so the range high is the new bias, but we open up a bigger time frame chart, and this is our final down liquidity, which will be almost 3 pips, which is enough. What is our longs? Remember, this doesn't exist. We see an order block here. No, maybe if you're going to 1 minute, this is the order block here, this one, but I rarely go into one minute time frame, to be honest. With 5 minutes is more than enough. Remember the sequence. First one, turtle soup. Second one, order block or range low in this case. Acting like a what? Change instead of delivery. Look at how it tries, and finally 8:15 was the news. Bam. So our longs will be the change instead of delivery. The range low here. Are we taking anything out here? No. Actually, we are buying here. Why? The drawn liquidity is not reached. Which time is this? It's not the end of the candle, sorry, the hour. So we are taking everything out here. Easy, right? 2 longs opportunities. In this case, we don't need to aim for 1 hour, because in this case it's 30 pips. So we can aim for 2 hours. So we are buying the power 3 of this candle. This is our liquidity. So it is 12 pips of take profit. So 6 pips of stop loss. It's good enough. And here we're aiming for 4 hours because there are news. So 3 pips. So our stop loss placement would be here. Perfect. Easy, right? Another clean and easy setup. Actually, I think that it was SMT here. I'm not sure, but we didn't want just looking at what time make the lower low. This is the last candle of the 7 a.m. candle. All right, next setup. Okay. I say this also a lot of times. So don't get trapped on this one, please. Okay. So imagine this could be a daily chart, 4-hour chart, whatever you want. Just a high time frame chart or a bigger candle, a very big candle. And this happens. Okay. We are here now. We are the last quarter. But look how price is delivering. Higher high, higher high, higher high, higher high. Is this how the algorithm is distribution price? No, never. It will never be like this. We need a pending range or a rested range to be created. Always. If you go long here, you are at the last quarter. This is not our drawn liquidity. It is the drawn liquidity of every single trade in the world. And look at this. It creates a pending range that it will stop you out and then it will go higher. Another possibility that opens above. If we are in the last quarter going into New York, imagine this is the 8 a.m. candle or 7 a.m. candle and opens like this, be careful going long. Actually, you can go long here until this low is reached. Or there's something here with, imagine this is EU, so imagine GBP took this low. So you can now go long. Not before. You are not allowed to go long here. Imagine this is 7 a.m. candle, so you must wait for the 8 a.m. to complete or to fail, but at least it needs to try. You already know at what time we are watching if this is a failure signal or not. So imagine in this case it was clean, it completes the rested R, and finally, boom. Why this happens? Imagine this is not now a 1 hour chart, it is a 2 or 3 hour chart. So in London, when this is a clear down liquidity, it will wait till New York to create the movement. In London will be high resistance liquidity run, consolidation, whatever you want to say. The movement will be in New York. Why? Because remember the daily candle, this case is bullish. So it's not my best candle I ever created, to be honest. Okay. This is the daily candle, for instance, or weekly candle. The expansion, if this is a weekly candle, will be during, let's say, Tuesday to Wednesday or Thursday. Then Friday, if this was a classic long candle, will be the its function is to close the power at 3. This is a classic setup on Friday. And on Monday and early Tuesday, what it will do is create the low of the weekly candle, the fake move, and then higher. So imagine this is now a daily chart. Exactly the same as the weekly candle, but now the body, which is inside the candle, which is New York. So in London, this could be Asia, consolidation. London creates a fake move or high resistance liquidity run move. And in New York, remember what I said before, it creates a turtle soup in case that is not being created in London. If London, it was just a consolidation, in New York, creates a turtle soup and went higher. But imagine this was Asia, this was London. So in New York, the turtle soup is already done. So we just need to complete the body of the daily candle, this one. And finally, the final hour of the day, its function is to close the daily candle. So don't get trapped going blindly long because the draw liquidity is clear. Wait for the right time. Watching the weekly the weekly calendar will help you to find out when this will happen. Okay. All right, next one. Sorry, let's find some example regarding this setup. So this could be the day. Let's see. 3:20. Okay. Oh, sorry, it's not this one. But sorry, this is the next one I want to comment. It will be on you, the one I want to watch now, on 12 here. And okay. So remember this day, really clean and easy down liquidity, which will this one. Actually, in this case, we can just add this one because this is a real liquidity void, a real gap. not fair value gaps. This is a real gap. Okay. So here is our dragon liquidity. So going into lower time frame, what do we see? Nothing here. Okay. So this is London. In London, we created, the top sub is already done on the day before. So in London, it's not a blind long. Look at this. We need to be able to read the candles. Opens above. This is 2 a.m. This was, I think, GDP on GBP or CPI, I don't know. So important news on GBP, meaning this day we can trade. We are allowed to trade at 2 a.m. So opens above, so it needs to restart the range. As soon as it's restarted, we can go long here. This is our first long opportunity. And also it creates what? It creates a pending range. And look at this. Here, this is not complete and opens below. This is another pending range, another long opportunity. In this case, it was really, really clean, but it's not always this clean. In other cases, this was really, really clean, but maybe the retracement is higher. Imagine this is a 2-hour range, so it needs to restart or create a pending one and then go higher. So because the pending range are already being created, we don't need here to create another one. But if this was just higher low, higher low, higher low, higher low all the time, this is a real red flag to go long here. Unless a correlated asset like DXY or GBP, USD, it created a pending range here, okay? And this day already commented, but the longs would be, this is a 3 a.m. candle, so this is a range. Remember, we need to restart this one. So from here, our first long, look at this, restart this one. So as soon as it restarted, here, our second long, and going into the news, boom. Final dragon liquidity here, or in this case, if we don't have a day profit, we can just left as soon as a new high is print here. Okay. Another example regarding this setup. We'll be close to this day, on 18th. Okay. Here. Okay. Look at this huge range. Sorry. $12-hour range. Okay, easy dragon liquidity. But look at this. What do we see here? Opens above. So needs what? Needs to restart. But look at where we are. Last quarter of the range. We need this dragon liquidity? No. As soon as a new range is being created, it's the one that will be used to higher. So let's find out our setup. Give me a second. All right. So this is, look at the time, this is the London candle. And the news, I think it will be at 10 a.m. Let's see. Give me a second. The news will be at So this is no news. 8:30. Okay. This is the most perfect scenario you will ever see, I promise. Okay. Look at this. Look at how close are we of this liquidity. Actually, we just complete this range. So for us that we know how the ranges work, this will be a hint. When a range is complete, it reverses, also it creates this one. So this is our liquidity. But because of there is a bigger range, let's say on the left, or in this case in the lower time frame, the job's not complete. So this is just a retracement to go higher. Look at the time. 1 a.m. This is London. This video is not regarding London, so my focus is just in New York. This is the bias, not the liquidity. So we already know the bias is bullish here, so we can just delete this one and we exit here. Let's refine the entry as always. It's exactly the same one. This is a filler swing, maybe a SMT. We don't care. I couldn't care less, to be honest. We can refine something, but we'll focus just only on 8 a.m. That is the news. So because of this is news, this day we want to trade as close as possible to the news. In this case, the lower low was created at the end of the 7 a.m. candle, and at 8 a.m. it tries to make the lower low. So to me, it looks like this, as always. And how clean is this? If I find this setup live, I'm going long as much as I can. I'm going full margin. It is 100% chances or 0% chances that this happen. 0%. But before I do this, please at least study for 2 months or have 2 months experience, please. I don't want to be the one that makes you broke for life, please. Okay, going into this day. The news are 8:30, so we are going full margin. Please don't do this. And look at this. It fails to it fails to complete this. So, and of course this one. So we are not afraid to go long. As soon as the new candle is printed, power 3 going long. Here. Is this our liquidity? So where I mean 1 hour? No. Is this our liquidity? So we can aim for 2 hours. This is new, so we can aim for 4 hours. Here. Okay. Another easy and classic New York scenario. Trading London on this day, which is the liquidity that clean, would be painful. Why? Because you are just focused on going long. Because this is real clear. And when you give up, you say, okay, it's just finally going lower. This is when the real long setup happens or appears. Okay. Okay. Now, actually, the setups are really similar, as you can see on the London setups, because the candles formation it's always the same. The only that changes is when the time of the candle is being printed and how it's being printed. But let's say how it's being I know the word now. Forget. All right. Okay. Low probability setups. If you see what happened this Friday, actually you will see it better on GBP. look at this shitty price action. You will understand now why. You will understand better on the red flags setup. Sorry, red flags to take a trade. But this is something that you can learn. So in this case, imagine this was a 2-day chart. You see, 2-day chart. Look at the ground liquidity. Complete. You see? So this is a 2-day chart. And the ground liquidity is complete. So what do we expect? Two things. First one, reversal. Second one, because the job is already done, consolidation. You can expect something like this. And this is exactly what happened. This was Friday. It doesn't mean that Tuesday and Wednesday will be like this. No. As always, focus on what the new candle is telling to you. If this is a new range here, and imagine this happens on Tuesday, maybe we can find a long setup here on Wednesday, okay? Don't be a pattern trader, please. Okay, so I was saying this was a 2-day range, but now I'm focusing on New York. So imagine this was London. Imagine on London, this was Asia, so London, complete the R. So you can expect this on London. You can expect even more if this day is Friday. Why? Because the weekly objective will be already done. The daily objective, which is this low, is already done. So the algorithm doesn't need to create a sentiment of price or create a new range of price to go higher here or keep going lower. Why? Everything is done on the week. So let's find out what happened on 21st of June. Okay, this is London. It was the PMI on here at 3, the Germany PMI, and look at this. This was a daily or 2 days or 3 days, I don't know, range here, 1 day, which on DXY was already complete. If it's complete on the correlated asset, you can think that this is complete too. So what do you expect now? Look at the day, it's Friday. What do you expect for New York kill zone or session? Absolutely nothing. You better go to enjoy your weekend, okay? Nothing to do here. Different will be that this happened. Why? Because in this case, a new range is being created. You see? This will be a down liquidity. Actually, this happened on London too, so the setup in this case will be also in London. But imagine this was almost New York, so the down liquidity for New York will be this high. But because we are playing inside this range, this candle, sorry, there is no real range. Unless a high or the low is being activated, you are just playing inside. Okay, what happened here? It just closed it above, so it invalidates this scenario. This simple. All right, next setup. I was drawing. Oh, I deleted everything. My bad. Okay. Similar to the previous one, really obvious dragon liquidity, right? But going into New York, what happened? A red flag that you will see on the red flag episode. What's happening here? This is the 1 hour chart, and this is 8 a.m. candle. We have news at 8 a.m. at 8:30. You are going long here? No. You cannot go long when we are going counter trend. In this case, I mean, we are not going counter trend, we are going with the trend, but we are opening above. You are not allowed to go long here. This is what will happen. Or we'll just whipsaw, stop you out. Okay, so in this case, we expect this candle to go lower. And which will be the range that will be respected? Something like this. Okay, and this is our downgrade. So let's see, for instance, this day what happened. 25 of June. 25 is here. Okay. You see, right? Clear setup here. The range low is already taken, so this one is activated. We can refine. Look at this. We are at the last quarter, so there is no way to go lower because this is already done. We can't refine anything here, nothing. And look at this. What do we see? Look at this. You will see that this is a failure swing. Going into 1 hour chart, we find the bias, and look at this. Look at the time. 7:50 and 55, it creates the high. Meaning what? The 8 a.m. looks like this. So to understand this setup, when the down equity is that clear, when the turtle soup is already done, when we are at the last quarter, you will blindly going long here. No. Remember the failure swing episode. Look at the time. This to me and to you, this, the 8 a.m. candle, opened and went above. So be careful going long. What is our down equity? As we are going counter trend, here. This was a really important news, and when more lower than this. But it doesn't mean the scenario is not valid. It doesn't mean that this down liquidity doesn't exist. No. It doesn't change anything unless a close below. So what do we expect? We expect the range low to be respected, and if this is respected, the bullish scenario is still in play. And let's see if the range low is being respected. Look at this. Every single time that tries, look at this, and final here. Every single time that tries to go lower, it changes the state of delivery when it touches the range low here, 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 here. So we already know this was on Tuesday, so we already know that Wednesday will be easy longs. The pain is already done, so easy longs. Look at this. It fails to create this, to complete this range. So this is what? A short opportunity turtle soup, market chip structure, some fair value gap in lower time frame. This one, is it a short? No. It's just an opportunity to go long. Okay. Actually, this happened in Asia, but you understand, right? This could happen on New York, on London, whatever. Actually, if this is the pair in USD CAD, it will happen, I would say 80% of the times during New York. And final setup, I want to comment, it's a really similar of this one. Actually, the one I want to comment is this one. This is also a beauty. So in New York, at the beginning, this could also be the 8:30 candle, which there are news here, or 10 a.m. because it could be also news. So it completes this one, and remember, every time that orange is complete, and this is not a higher time frame range or a higher than equity on the left, it reverses. And we also have this. This is our bias, and this will be our dragon liquidity. So we expect this candle to do something like this. This is also a beauty. This is also a reversal scenario regarding London. So let's find now some example. In this case, your cat, because not, as I said, this happens on every single asset, every single day. One of the setups I said, every single day it will happen. So 6. I think it was this day. 3 hours. Okay. This. Sorry, 6. Yes, this. So this is a range. This is London. Look at the time, 1 a.m. expansion and 5 a.m. expansion. So 8 a.m. we had news, or no, we don't have news because it's 8:10. So the bias is really bearish, but we are at the upper range of the range on the left, right? So we expect what? Intra-turtle or a 4-hour range, in this case, to be activated. You see that this one is already complete. Sorry, it's not complete. It needs to complete. This is a restart range. Open, went lower, below, and it needs to complete. So from here will be our short opportunities. And we also have what? We have this candle, which will be a pending range. So it's everything in our favor to go short. Okay. Look at the time, it is half of the candle, and look at the time, it is end of the 8 candle, meaning the 9 a.m. to me looks like this. This will be an intra-turtle soup here, and this will be our down liquidity, exactly. Sorry. And our shorts will be on the order block. So shorts inside the 5-minute range or the 9 a.m. candle, power 3, because the high is already done. We don't expect the 9 a.m. to make the higher high. So the order block will be a short, and the next power 3 of the 9 a.m. candle is our second short, sorry. We are not taking anything out here. Actually, this is 11 pips. And this is our exit. Look at the time. It's the middle of the hour. So it is a good exit opportunity. And finally, the last example regarding this setup. It is on 10th of May on you. Now let's go. What do we see here? Look at the bodies, how it's being respected. I love this setup. And let's go into New Year. So going into New Year, we are the upper range of the 4-hour range, and we have news, I think, probably. No, I don't think we have news here, because there is a huge candle. But okay, so this is the 5 a.m. Candle, 5 a.m. expansion. But going into the 9 a.m. expansion, which is this candle, it makes the turtle soup. It is going higher. It's going higher to what? The turtle soup, and then going lower. Look at the time also. 55. So to me, as always, the 10 a.m. Actually, let me check if 10 of May we have news, because I think yeah. You see, right? So as always, we want to trade as close as possible to the news, which was 10 a.m. here. So we don't want to trade during the classic New York Open, which is 8 a.m. Why? Turtle soup is already done, so we are just going lower to the down liquidity, right? Easy. No. Look at that. You can, you could of course go short here. Look at how range height is being respected. Of course, this is an easy short, but look at the time. As soon as a new candle is created, this is the end of 8 a.m. candle. If you didn't take anything out here, these are 100% you need to place break even. Why? Because we are getting closer to the news. What's going to do before the news? To create a range. So if the news happens on the 9 a.m. candle expansion, the manipulation, let's say, the turtle soup, needs to be at 9 a.m., right? Why needs to be 9 a.m.? Because this is not a clear ABC setup. This is not a clear 3 candle formation. That this was 5 a.m. and this is the 9 a.m. candle that continues going lower to the final down liquidity. Everything is happened here. If everything is happened here, what we want is before the news. Remember when I say that when there is news and it is consolidation, it is consolidating just before the news, it will create the range. So create the range, and then with the news, we will lower. So 10 a.m. it is 55, 9:55, and creates the high. So what is our short? Well, anything before the news. 1 minute before, whatever you want. What is our take profit? This could be a good one because this news we can expect for hours. But if we wanna play big, this could be our take profit and our stop placement. So because of we are going to agent session, we don't. To me, I don't want to hold trades overnight. So my what I want to expect is this range high. So I don't want the price go back here. If this happens, that will be a break even to me. And also we have the bias for next day, by the way. So in this case, I'm out here. Actually, I probably would be long. And if this is being respected, if not being respected, it invalidates this scenario. This is the case, by the way. And probably we have a bigger R here. I think, if I'm not wrong, that in another broker, this is taked. So the range on the left is telling us that this is our liquidity, but I'm not sure. Okay, this is the real range that is link price. So in this case, we don't need to complete, I don't know where it was, here. We don't need to complete this range because as soon as a new range is being created, a pending range is being created, is the one that we'll respect, and then we'll go higher. Easy, right? This is another example I said before. When this is news in London, will be just consolidating or going counter trend, to wait till the news here, 8:30, to happen. I took this one. This is, if you understand this day, it is, I think, I don't remember, a most advanced day than this one. I took this short and I took the same long here. We were in the last quarter of the range, but if you understand this, you just complete the trading game. Okay, there's nothing more difficult than being able to short this and go long here. If you understand what happened this day, you're gonna study. It's 14th of May of this year. You can go study. And final drawn liquidity. Remember, what's the best that could happen to us? This drawn liquidity remains intact. Why? We already know the bias for, in this case, Wednesday, 15th of May. So when the target is hit here with the news, well, anything to say? Any odds that it was a short here? Nothing, right? So when this trade is done, I think this was the last example. So the New York setup is done. Hope you enjoy, hope you learn, and see you next one as always. Hello guys, and welcome to the red flags video. So this episode will be about the red flags. When you see this on the chart, you should avoid trading, or you can recognize it and to break even and avoid the stop loss, or just avoid the session because it could be high resistance liquidity run or the same, which is low probability conditions. Alright, so the first one would be trading inside the range. What I mean with this, so this is the classical, the every single day range, but this happens a lot on news. I mean, not a lot, but when it happens, you can not trade. You are not allowed to trade. What I mean with this, so classical turtle soup stone here. So imagine we have news here. So this is 7 a.m. This is a 1 hour candles. As always, this is a high time frame candle, but imagine this is the 7 a.m. candle, and we are currently at the 8 a.m. Imagine 8:30, which is also usually the New York news, and we are here. Okay, so in this case, we are not allowed to trade. We know that this is the down equity here, but we are not allowed to go long. Okay. Why? Because you will probably got stopped out because this range is not activated yet. So what price will do probably is make what it's called whipsaw. A whipsaw is just a wick that liquidates everybody, makes the counter trend move, and then go higher. So if the range is not activated, you are not allowed to trade. If you know perfectly the bias, I mean the dragon liquidity, what you have to do is be in front of the chart, have the broker open, and the position prepared. As soon as this wick liquidates, I mean not liquidates, it takes this low, we press market long. You can prepare like, I mean, more pips stop loss than usual. Let's say if you put normally let's say 6-7 pips, you can place 12 and don't go for 4 hours, just go for 2 hours or 3 hours. Will be more than enough. Why? Because this is an advanced level of execution. Okay, trading while prices uh, whipsaw like this and will quickly go higher. This is the first red flag. Another possibility with this price action trading inside the range. Another possibility is that this happen. So so we don't know if price will open and go above with the news. So what's happening in this case? If you are going long here, it will go up a bit, take this high, and then go do something like this. Why? Because this is a reset range. And then the next candle or the same candle will just make the movement up. could be something like this, or it could just the single candle first go up, activate this range, so now needs to restart, and the same candle completes the R, and it looks like exactly the same, like if it is a pending range, because the end of the candle will be something like up here. So let's find out some examples. Actually, this is this red flag I discovered trading. I mean, while I was trading already with this strategy, I discovered that this is a red flag, and I got stopped out 2 times, I think. I'm 100% sure that I got stopped out 1 time, but in this case, in USDCAD, I'm not sure. Yeah, by the way, I'm already at this, sorry, I'm still on the chart. I took the first, yeah, at 8:30 with GDP news on CAD. This was my first partial, and trade is still running, going into the final target, which is this one. If you want to study, just looking at the notations here, this 1 day, 2 days, and this will be 3 days, and this is the weekly one. This is a 15-minute candle, I mean range to go lower, and you can see where I sold. Okay, yeah, I want to go to use it at forex.com. 25. Sorry, no. I got confused. This is only one example that I got stopped out. I remember now. It was on GBP trading the news. 21 of June here on Friday. Yeah. So we had here. This was the PMI day on the services of JBP, and my bias was bullish. We were trading inside this candle, and we had another red flag, which will be one of the following ones. But just focus now on the one I'm talking right now, which is trading inside the range. So look at the time the news happened, 4:30, and look at where we are. So the extremes are not taken here and here. You see, we're trading inside the 3 a.m. candle. Here is where news happened. So even that I was bullish, I went long here. My stop was, let's say, protected, something like this, and even this was my non-liquidity. I never reached. I thought that I was right, but this is what happened. You see, look at how quickly it activates this range, the 3 a.m. range low, and look at how quickly came back to the entry in the same minute. Okay, so in this case, because we were inside the range, we got just wait, and as soon as activate this low, we press the long button here. you can prepare like 10 pips stop loss because price doesn't need to do this. I mean, it doesn't make any sense because there is nothing here. As I said, it was, well, I didn't say this yet, but this was the range objective for the week, and you see that on Friday was already complete. So we didn't have any other objective for this week. So in this case, price doesn't need to whipsaw like this because there is no objective here. So as the only objective was this low, here we can be ready and press the long button. And what is now our objective? So the first one is this one, is complete the 3 a.m. range high. You'll see the first objective was complete, and then it fails, but you should be now protected. You see that this is the 5 a.m. and tries to make the higher high. When it tries and fails, your stop loss should be here below the 5-minute candle low. And if you still trust your trade, you just place your stop loss at break even and let price do whatever he wants. I mean, in this case, stopped out break even, but the objective, look at this, was done. So another example of this another example will be, if you remember the live trade I took on you regarding the interest rates of Europe. It was I don't remember. Here, let me check. Yes. So the news were at 8:15, and we had another news at 8:30. But the news I trade was at 8:15, the interest rates of Europe. So this is the 7 a.m. range low, and this is the 7 a.m. high. So the news were here 8:15, and if you remember the video, this was the dragon equity, lower. Okay, meaning what? I was prepared to go short in case that it takes this high. This was my partial. This, you see, this 1 hour range. So the range that is respected, it doesn't need to be higher time frame. It just needs to be on the left. You see how we are playing inside this range here. We can trade inside here, but for instance, you see this one. This is reset range, opens below, need to go above here, but low hanging fruit objective as we are still on this range. So as soon as it completes the resetted range, it creates another pending R. Look at how activate and put the objective, but in this case opens another resetted R and just consolidating. Why? Because during the interest rate news, price tend to consolidate before the news, let's say the previous session. And look how shitty price action was this. Again, 2 a.m. opens and goes below 3 a.m. The objective will be this high, 4 a.m. here, but we are not going to this high and this high because we are going counter trend. So as soon as it completes the restarted range, the objective is done and reverses. So now here, we were trading inside the 7 a.m. range. So because we are bearish, we want to go first above. So I was ready to press the sell button manually. My stop loss was, I don't remember exactly, but it was something like here. And my first take profit was here. Let's see what happened. That I got in break even here, the second news, but it doesn't matter because the volatility was really clear. As I said many times, you don't know if it will just whipsaw and go lower and on the exactly same candle or the following one. So this is why you need to be quick if you know the liquidity. So be quick and go short here, because maybe what would happen could be something like this. So this is a 1 minute chart, 8:15, the news. You see that on the first minute didn't take this high. So in this case, we have time, but maybe another situation, it could be something like this. Okay. And on the following candle, just reverses and go lower. Okay. So in this case, we had time to go short, half an hour more or less, and finally breaks down. This is the bias, the 7 a.m. low, but we are not taking anything out here because the first objective was the 1 hour range low. Here, look at how it completes and reverses, but this is not the final objective, which is the 12-hour range low. And finally done. All right, this is the first red flag. In conclusion, you are not allowed to trade inside the range. Where is the exception? When, in this case, the correlated asset looks like this. So imagine we are trading EU and GBP took the 7 a.m. low or the XY, whatever. So in this case, yes, we can trade the EU. Why? Because the correlated asset already complete, so already created the pending range. Also, if there is a filler swing, you already know what is a filler swing, how to identify. So these are the exceptions, but if there is no sign of filler swing and the correlated asset didn't take either the low or the high, we are not allowed to trade. Okay, so next one, it will be when we are trading. In this case will be London, but can also be New York. You already know that London, the 3 a.m. candle, most of the time is the candle that makes expansion. It's not 100% of the days like this. Sometimes it expands at 2 a.m. and sometimes at 4 a.m. But let's say 80% of the times expands at 3 a.m. candle. So imagine we have this clear range, and we didn't see that there is a higher range here. That is bullish. Imagine this, okay? Imagine we had the wrong bias, and we want to go short here. So a red flag could be that at 3 a.m. it takes this this low and reverses. How it reverses? So in lower time frame, in 5 minutes, you will see a change in state of delivery, like you know which are the change in state of delivery. The first one is order block, and the second one is a range low. So if you see, so we are going from sell program, and imagine at 3 a.m. or 2:55, you already know the first swing. So 2:55 or 3 a.m. it makes the turtle soup and it changes. So if you are short something like this here, and you saw this here, I would place break even quickly, because if the changing of set already happened at 3 a.m. when took is low, you probably are missing something on the left. Not this left, but this one. And this will be the direction of the real move. What could also happen that you are missing a higher time frame candle here, not this one, but here. Imagine this is now a 4 hour candles. So this is the for the, sorry, 21. So the 1 a.m. candle makes the activates the low. So the next objective could be, if you had the wrong bias, could be higher. This one, and finally this one. Okay. So let's find out this example in a real case scenario. That would be on 17 of May. Or not, I don't know. Okay, let me check. Maybe it's not this way. Yes, you got this. 17th of July. Let's find out which is the range. So, okay. Forget about anything that could be on the left. We are just focusing here now. And we have this range. We also have this range, but imagine you had in this case the wrong bias, okay? I mean, you have two possibilities, 50% or works this range or this is the one that works. So imagine in this case, you choose this one because you didn't see monthly range, whatever. You didn't see that GBP had a 3-month range to complete, whatever. We don't care in this case. You just focus on your bias here was short, okay? Look at this. This was already complete on you. So this candle is not interesting anymore. But look at the 4-hour range. We have exactly the same as the daily chart, two possibilities here. This is the range that will work, and this is the liquidity here. Or the second possibility is that this is the range that will work. To go higher and going to, maybe this will be a 12-hour range. I don't know. We don't care. So look at how precise it completes, and let's see at which time. Which is this candle? This is 3 a.m. and this is 3:05. So this is the beginning of 3 a.m. and change in state of delivery. So if you were short here, because this is the 4-hour range high, imagine you went short here, and you see that at 3 a.m. it takes the 21 4-hour range low, and look at this huge candle closing above. What is this? This is changing state of delivery. The next candle will open, do power 3, and respect the order block. You see? And finally reverses. Now I'm seeing that first went higher, so in this case this is not a pending R, it just a restarted R, meaning that what? It doesn't need to go lower than this, so as soon as it completes this R, it will reverse. So another red flag that I see, to be honest. So if you saw that first went higher and needs to complete, and you see that as as soon as it takes this low and reverses, you already know that this is a restarted range, and if it reverses so quickly when it took this low, this is I mean, you can just close the short quickly and reverse your trade. And look what finally happened. Okay, don't be afraid of be wrong and close the trade with not even one-to-one profit or at break even when you are 2 hours, thinking that okay, this is the range that I was watching, and imagine that you don't even notice of this range. So okay, it will go 100% here. No, if at 3 a.m. makes the lower low of, let's say, in this case, this is really clean because it is the Asian low. But imagine this was the low. That is, you can see it visually here, that this is the low to take. So see, if at 3 a.m. reverses and creates a change in state of delivery, in this case, and you are stopped out here because this is a high, a big 15-minute candle. But watching 5 minutes, you already see that there is a close above, so red flag for your short. So if you can reverse, you can do it quickly. And really beautiful move. Okay. If you're trading New York, exactly the same will happen This is 7 a.m. At 8 a.m. candle, it will be exactly the same. If you have a really clear range to go short, and at 8 a.m. do that creates a lower low, so be careful. Alright, so going to the next example will be so exactly the same. We have a really clear range, in this case to go short, okay? And imagine it happened something like this. These are 1 hour candles. So here we have news, 8 a.m. What is happening now? This is the clear down liquidity, but it's opening below. So if this is opening below, what's next? You know, right? Needs to complete this range. So don't go short here. I prefer that you miss this move than you go short here. Why? Because what that will happen will be this and then lower. This is the first possibility. And the second one is that you choose the wrong range. And now imagine that this is the range. These two candles are the ones that created the range. And the 8 a.m. before the news already took the range low. So the next objective will be this one. That's the case when I say we are going counter trend. So this is the range to restart, but as soon as it creates a new pending one, it will reverse. So it doesn't need to complete this range. This is one of the examples. Okay, so basically, really quick, if there is a clear down liquidity, but the candles open at the same direction of the down liquidity, don't go short if bearish. Why? Because it needs to restart, and then it will go lower, or you maybe pick the wrong range and will expand higher. But you didn't go short, so you didn't went stop down, didn't got stop down. Okay, USD CAD example on 25 of June. I don't remember which news was on this day, but at 8:30 you see that there is a huge movement, and let's see, because these are a very interesting day. You will see that everything is telling us we are going long. We can refine. So all the objectives are up here. We can refine even more. Okay, so 25 of June, and this low was already taken. I will show you. You see, the 3 days, 2 days, and 1 day range is activated here in Asia and London, and it's respected. And in London is displacing higher. It makes 30 pips, let's say, whatever. This is our down liquidities. So it will go higher 100% because you find out that the down liquidity is bullish and you just place your long here. No, you got stopped out. Okay, why? Because in this case you are trading like a pattern trader because you know the dollar is higher and you just went long. No, you need to understand what's happening in lower time frames. Look at the time, 7:55 or 7:50 creates the high. So what does it mean? That this is already 8 a.m. candle. This example is difficult and is advanced because you need to know perfectly what is a failure swing. You need to identify, but you need to check also if you are trading USD CAD news, the CAD news, you need to check EU CAD, GBP CAD, New Zealand CAD, Aussie CAD, and you will find out that on the other pairs, I don't know if the 100% of them, but at least 3 or 2-3 of them, it will create the higher high at the 8 a.m. candle. So you don't need to identify the failure swing in this case. So look at who it likes. Well, this is already with the news, but the 8 a.m. open and go above. So which is the objective for the news? At least here. So this is a good short opportunity. Okay, finally went lower. Maybe you see that there is a higher time frame range. Probably we'll have another one going into Asia. You see this one. Just look. So this range extremes wasn't taken. So first took the high, so needs to go to the low. Finally this price set lower, but we don't care because we are not allowed to go long. So the possibilities here are you are doing nothing, you are just watching, or the second possibility is that you went short. Maybe this was the 7 a.m. low here was your take profit, or you don't have take profit and you got free move and you close something like here with 3 or 4 hours. Good for you. And the other possibility is you are just watching. It needs to be, it means that you are wrong. No, it just made the another turtle soup or an intra turtle soup. Actually, the daily chart still looks like this, so nothing changed. It just made a lower low. But if you want these ranges to be validated, what's that we need? That the range low acts like a real support. So we don't want any body closing below this after the turtle soup is done. Let's see if we got a close below. Actually, look what's happening here. every single time that price tries to make the low, look at how touches the range low, acting like a support, real support. So we already know that the next day the bias is bullish. So it took this this high, but it fails to complete this. So we already know that on this day the odds that are that the bias is bullish. Nothing on this day, and finally on Asia completes the range. Okay. So let's find out another example, in this case on GBP, 29, sorry, 9 of May. So this day was interest rates of GBP, and let's discover which is the drawdown liquidity. To me, this is a range, but imagine you think, okay, close is closing, body is closing below, so I would use this as a range. It works exactly the same, so no problem. Also, you have these two of our range. You see that the extremes are not activated. So what do we see here? Actually, two things. The first one is the first example of red flag that we are trading inside this range. In this case, this is a 12-hour range, so maybe, I mean, we can trade inside, but if we want to go higher, needs to be first the low taken, and then higher. But the news was here at 7 a.m. And do you see some pending range here to go higher? No, actually you are seeing that this is a restarted range to go lower. Look at the time that the height is created. It is, I mean, it was consolidating at above the 5-hour range high during the whole 6 a.m. candle, and finally at 8:63 made the higher high. Well, actually it happens here. So at 7 a.m. doesn't need to create the higher high because the Tardo soup is already done. So you are not allowed to go long here. Why? Because the R which is activated now is to go short. The first objective will be this one, but seeing that the 12-hour range is not activated will be this one. So this is the case that if you don't want to go counter trend and go short here, I mean, if you don't want this, you just can, as soon as it takes this this short, in this case it will be really quick, so you don't have time to go long here. So you are going long here because it was really quick. So you can wait for the new candle to open, for instance, but imagine you just went long here because this news you are looking for 4 hours. Something like this, whatever, 4 hours. Well, in this case, I would say better wait for a change in sales delivery in 5 minutes, that it could be an order block or the range low. So actually, look how this range is now activated. So first entry is startup sub. That was here. This could be your first long. The second long could be once closes above this order block, which is exactly what happened now. So as soon as the new candle opens, makes the startup sub and you go long. And the next one will be the range low. This is a red line. So look at how it closes above. So as soon as it touches again, here, this is our next long. Unfinished job. So we are not afraid to still going long. And finally, done. Over the time, it's not the end of the candle, so we are taking everything out here. So this is how you could trade in this situation. But what I wanted to focus with this example, it is that even that the liquidity is higher, the new candles are opening above. So we want first to restart the range and then higher. Okay, this red flag is done. Let's find out the following one. Okay, bullish case scenario here. I already talked about this example on the New York setups, which is we are inside this range and this range, which is the one that is leading price. Look how the range height is being respected. So which is the real objective? So the real objective is the one of that is on the left. It doesn't need to be the higher time frame. It is on the left. Visually, you can see that bodies are closing inside, and we're playing inside this range. So in this case, the liquidity is not this, but this one. So what's price gonna do? Creates a pending range. It could be just this little range, and once it is activated, have a free roll to higher. And I think the example I'm going to show you is exactly the same that I show you on the New York setups. I'm not sure, but I will repeat again. So the range on the left that is leading right now is this daily range. Maybe we have nothing here. Yes, we have another objective higher, but for this day, this is our focus. This one. Okay. And what do we see in lower time frame? I'm not sure which is the range, to be honest. So, Well, okay, this one. We have two possibilities now because this high is already taken, so this range we are not taking into account. But imagine you didn't see this one. So we have now two possibilities. Well, actually we saw this one, but we are confused and we have like 50% chances it will go to this range or it will complete this range and higher. So it doesn't need to complete this range because the turtle soup is already done here. It's activated, and remember, in counter trend, as soon as it creates a new pending range will be the one that is respected. So in this case it creates this pending range on 12-hour chart and it will higher. What else we have? Remember what I say about the the candle of the news when it's opening above and below. In this case, look how beauty was this candle, opens below, so it is creating a pending range at the candle that will create the news. So going into lower time frame, what we see is this. Look at the time, exactly 8 a.m. So cannot be more perfect than this. This is the first long opportunity. Second one, look closes above. So as soon as the new opens, makes the turtle, turtle of free, power of free. It's too soon here. It's not even 8 a.m. So this is not the run equity. It is the bias. This is the run equity. Why? Well, actually, this is a lot of pips. I think. Well, not a lot, but 25. This could be a good partial, but I think it was important news. Maybe interest rate or CPI. So we can look for 40 pips. So first partial, but the long equity is not complete, so we are not afraid to go long again. Finally done. We can exit, we can full exit here, finally. And the new candle when it makes a higher high. Why? Because it doesn't need to go higher. In this case, your stop loss should be below this candle because the two objectives are done already, and at the new candle opens and went first above. So probably the next objective will be lower. This doesn't need that this is not the run equity. It needs that first to create another. This is a restarted range, and we'll create a pending range, etc. And probably finally we'll go to the run liquidity, the last one. Let's see. Done. Actually, look at this beauty again. Look, this is not complete. Why? Because this is a restarted range until a new pending range is created. Which is the pending range? This one. So this is the one that's leading price now, and final take profit here. Is it right? Once you understand, it's over. Mm, okay. Look, this is the range. During the whole PM session, yesterday, well, actually, the whole New York Asian session and London was respecting this range. Look at every single time that tries to create a higher high, it fails. But you maybe are missing something on the left. See, and what happened here? This was news at 10 a.m. So the 9 a.m. candle will be the one that will expand lower or higher. We don't know yet. Well, actually, we do, but first one lower, so it needs to go what? Higher. Looking for lower time frame candles. It's first going lower or higher? Lower. So every single candle open, it's telling to us it's going higher. So even that you didn't sell this one, you're just focusing on what the new candle's doing, you will know that will go higher. So this range won't be respected, and this is the range that will its price. Look at this. This is exactly 99 candle, but the news was at 9:45. So we want to trade as close as possible to the news. So we are not going long on the start of sub at 9 a.m. It here creates a lower low. This is only 25 minutes left for the news, so we can wait for an open above the order block. So we can go long at 9:30. Power free, power free, power free, and finally, boom. You see the round with this reach? No, so we can go long again here. We are not afraid of going long again. Finally, look at the time. This is the new candle, so our stop loss should be below the new 5-minute low. And if because it failed, we already know the bias for the next day. Maybe. So this day opening. Well, it was bullish till here. Let's see if finally reach the liquidity. And look at this, the following day. And right away, this is a failure swing, but to me, this looks like a pending range going higher. Really beautiful. Okay, so the example is done. Let's find out. Okay, the next example will be broker disparity. What is this? When two brokers, let's say Forexcom and FXCM, that are the ones that I always analyze and trade. It doesn't look the same way. Why? When this happened, the reason is, I would say, 99% 99% of the times this happens on Mondays due to the new week opening up, because on Forex.com we don't have new week opening up, and on FXCM most of the times we have new week opening up. This is Monday, so well, this actually happened, yeah, on Tuesday. Look at this. This is FXCM. In this case, we have new day opening up here. And on Forex.com, we don't have new day opening up here. You see a difference between exactly the same pair on different brokers. So this day I was watching only FXCM, and I don't know if I got stopped out or at break even, but I was waiting at least to take this low. Why? The fuck? Okay. So watching this, what do we see here? At least this low needs to be complete, right? The 1 p.m. Candle created on Monday. So if you're watching this broker, you would wait forever that took this low. While once you go to forex.com, the fuck? Okay, it's not working. Forex.com. So let's go to Wanda. It's not broken either. Okay, whatever. I say 28th of May. 28th of May. So this is the 5 p.m. candle created on Monday, and here was complete. Also, we have this candle open, and we have a clear down equity here. So if you were, in these days you were watching forex.com, that will be really simple. Actually, this is the 2 a.m. So in 3 a.m. here at 3 a.m. creates a pending range and it failed. Why? Because the 4-hour range low is not taken, so this is not an opportunity to go long. We are waiting for what? For the 4-hour range low to be taken. Once it is taken, we want a pending range to be created. But look at the bodies. Bodies are closing inside, so this one is the one that is still leading price. This is just an intra-turtle soup, and we are looking for low time frame range, a pending range. So we have nothing here, and look at this. So we can refine the R. Let's find out this is a failure swing, and look at this for our entries. So first one, turtle soup. Second one, in this case, never came back again to the north block, but this is power free inside the 15-minute range, and also this is the range low of the 1 hour candle, so acts like a change in state of delivery. So for instance, this is a long opportunity. Well, actually it comes back to the north block, so this is another one, long opportunity. your stop loss is safe below the low, and looking for 3 hours. Actually, this is not a pending range of 6 hours, it was a restarted range. So here, let me explain everything again, because it would be confusion. 6 hours. This is a clear range, right? So first open and went above here. So needs to go where? Lower here. 3 a.m. Remember when I say that at 3 a.m. change the set of delivery and creates a higher high closing above this? Okay, but remember the case that this low was taken here. If this happened, and you are short, this is a red flag. Why? Because this will act like a order block. But was this range complete? No. So this is just a retracement to go lower. Once this is done, we want a pending range. This is closing below, outside. So this is not the pending range. Is any candle closing outside? No. Look at bodies respecting. So this is the real pending range to go long. So let's find out if we have, yes. So going into 8 hours, this is a pending range. Okay. So, yep. Every single time frame is important. For instance, in this case, the 6 hour were telling to us it needs to restart, but 8 hours is telling to us this is a pending range. So we already know that it will activate the pending range and then go higher. When looking at 6 hours, we knew that activates the restarted range and needs to go lower. So we already know the movement lower and movement higher. Easy day. So another broker disparity could be this chart is broken. So as I said, 99% of the times that there is a disparity, it's because of the new day or new week opening gap. So that will happen most of the times on Monday, because it is when the new week opening gap is created, but could also be a new day opening gap on any day of the week. In this case, let's see 25 July or June, I'm not sure. On 2 days. No, it's impossible. 25 of June, maybe. I know. Yes, this I was referring to this broker disparity here. So in this case, it's not for new day or new week opening up. Okay, I just recorded 10 minutes without voice, so I'm gonna repeat again. what I was saying is that when you have broker disparity, this is another example. $25 of your line. Okay, so look at this. This range low. Maybe not this one. Okay, here you see why to me this is a range low complete, because the movement happened during a session. In this case, it was London. So look at how next day tries to make the lower low and it fails. And if you are only watching the FXCM, you think, okay, we are so close, it failed. So this will be 100% sure to complete the 2-day range low. But if you watch the not correlated, a different broker, you'll see that this low is already taken, so it doesn't need to complete this one. It just creates a range here and goes higher. And exactly the same happened, well, not exactly the same, in this case was different, happened on GBP on FXCM and GBP on Forex.com. Look at this. This is the new day opening up, the first candle of the day. This is the 3-day range low. So this it fails and this is complete. But is this complete to me? No. Why? Because it was complete with a new day opening up. I will only accept this as a complete if in all the brokers is complete on the new day opening up or the first candle of the day. Because it doesn't complete this one, we already know that is a floor swing, so the next day it will just complete and look at the reaction here. Okay. So next example. It's when, imagine, two correlated assets, such as GP and EU, for instance, like always, or whatever you want, Aussie and New Zealand. So we have this. And you got obsessed. Imagine, well, actually this is the classic SMT scenario, but I need to comment because this is also a red flag. So imagine you are watching this, let's say that this is GP and this is EU. So you got obsessed here to complete this range or activate this pending R, and you are not watching the correlated asset that already complete the range, so the next movement will be lower. While on you maybe, because you didn't see this one, you think, okay, this is just, it fails, so it's making a retracement to complete, and then maybe lower. But first, we need to complete now. Always be careful with a correlated pair. If it completes, this to me it's complete also, so the next movement will be lower, and this not long but short. Okay, so an example of this. Okay, so this is what I was saying, but the voice wasn't working, so I'm going to comment again. Look on you that we had this 4-hour 4-hour range, and look at GB. So maybe here, of course, you want to restart the range and then lower, but maybe you got obsessed looking for longs every single time. Here, but look at the correlated asset at 3 a.m. completes the 4-hour range and just make the 15 range 15-minute range. Look here, the shorts. So this to me it's complete, meaning that we have SMT here, and the next objective, the underlying equity, is lower. Look at the daily chart here. This is our underlying equity, and look at GP here. We don't have a underlying equity. Actually, the next candle activates this range and completes, but we are just focusing on that day here on you. So what do we see here? SMT, and here are our shorts. Exactly the same happened on JP. Short, order block, and final down equity here. Actually, the down equity was lower, was here. So because it failed in London, we already know the bias for New York. We just need to wait for the range to be created. Maybe this could be a range. Actually, I'm 99% sure because I remember that day. So this is a pending range. We don't need this high. Look, it fails. You will be waiting forever or going long forever because this is equal highs, whatever. Bullshit. Shorts opportunity and finally lower. Okay. So I will add just the last 5 minutes. Another example. 24. Okay, so I don't know which R. I think that could be this one. So in this case, yes, you will be waiting forever to activate this pending range. Why? Because in the correlated asset already already activate this range. You see, it fails here, but look at GBP how it completes this range, and look at this. Okay, so the last example would be okay, so probably no trades during today's session. The last example is on EU 21 of June. Oh yeah, remember this is also a setup. I comment in New York setups when to avoid a session or a day in this case. Well, a session in this case. So this was the week, the weekly objective. This daily range. Remember on the XY, this low, well, in the XY, the high was taken. So this was SMT. So low hanging fruit, or I would say, don't even touch this pair on New York session because the XY complete the range. So EU complete also the range. And there is no objective here. Why? Because we are playing, so which is the round liquidity here. If we are playing inside the range, this is two red flags in the same session. The first one is that we are trading inside the range. We cannot trade inside the range unless the correlated asset activates the high or the low. The second red flag is that the weekly objective is already complete here, and in London in this case made a huge movement. This was the PMI day, so we expect nothing for the rest of the day. And look what happened on New York. And this is also Friday, so too many things in the same day. See, the whole New York session, the whole first Asian session on Monday, and finally break the high. Okay, so this was the red flags video. Be careful when one of these happen because you should avoid stop losses. And this is gonna be it. Thank you for watching and see you on next one.
Alright guys, let's go to the 11th episode. I think this will be the last regarding the theoretical concepts and content. In this case, I will talk about news and how to trade news, how to avoid trading some news, which are the news that we're trading, etc. Okay, so first of all, for identify the news, we are going to forexfactory.com. I also look at investing. You can change your language here. I compare both pages because in some pages one news are a red event and the other one are only 2 stars, so I like to compare. I mean, right now I know exactly every single news. As you will see here, I have every single news classified and I will do the job for you. But if you're new trading news or you don't have any idea about every single news, I always suggest you to look at both websites and make sure that in both webs have 3 stars here or the red folder here. Okay, starting with Forex Factory, you should filter and having like this the red ones and the white ones. The white ones is regarding bank holidays or something like this. This is the pairs that I like watching. If you only want to trade EU and GBP, you can just place USD, GBP and EU. I also like trading CHF, CAD, AUD and New Zealand. That's why I have this activated. So exactly the same happened here. You go to the filters, this is the countries that I have activated. and 2 and 3 stars here, and there you go. Okay, once you have this activated, what I do is every single weekend I look the week sorry the news for the new week. For instance, I'm not trading um, Canadian pairs on Monday because it's bank holiday, but we have USD news, so we can trade on Monday EU and GBP. We also have here this week interest rates on OD, Aussie dollar. So I mean it's midnight in Spain, but if you're awake, you can trade. I mean not now because this is the first time you will know how to trade news, but in the future, if you're awake, you can trade this news on OZ. We also have, well, this week it's really quiet. We don't have a lot of news. We have unemployment on Thursday and an important news on Friday regarding the Canadian pars. Okay, so once we know where do we see the news we have for the upcoming week, we're going to classify. I'll already did the job for you. So I'm going to analyze every single news that I trade or I can trade, and I will explain which is every single thing that it's right here. Okay, first of all, regarding whipsaw is basically, once you see here this huge wick, that's a whipsaw. So basically we have a candle here. This is the opening price will be this one, and with the news and makes a fake movement just to activate a range or complete restarted range or pending range, and once it is complete, really quick, each change the direction. I mean this maybe is 1 or 2 seconds, no more. Okay, this is really quick, and that's exactly what happened here. You see, opening price makes a lower low. This is probably a pending range, completes the pending range and changes. So if you went short here, it will be stopped out, and then it will go to your take profit. You will know how to avoid trading the news. So this is whipsaw. Okay, to me a significant whipsaw is when it's higher than 7 pips. Why? Because my stop losses, the average stop losses regarding pips is more or less 7 pips. I mean, I'm okay with having a 7 or less pips of whipsaw. If I have more than 7 whipsaw pips, and it will probably take out my stop loss. So this, when I say 10% probabilities to have whipsaw, it is that 10 out 100 news will have a whipsaw above 7 pips. Okay, that is what I mean. So next, the red ones are regarding the New York kill zone, the blue ones are regarding London kill zone, and I also add 2 of the Asian session, which are in green. So the difficulty, 1, 2 or 3 stars, this is not the importance, but difficulty, meaning what? NFP is really easy to trade, meaning what? Really easy to trade doesn't mean that if you fail you blow your gun, you see. But first of all, difficulty is that it will be really clear most of the times. You see here, clarity 80% of the time. So I have a lot of data. So with the data I have, it's more than 20 data for each news. I mean, it's not a lot, but it's enough to know how to trade every single single news. Okay, so 80 then 80 or 100 times, it will be real clear where the NFP is going. So this means that difficulty will be easy, so 1 star. What happens if you fail? I mean, if you go long and with the news price go down, you have 90% of the probabilities to blow your account. This also changes. If you risk 1%, you will probably blow your account, but if you risk 0.5% or 1/4%, you probably won't blow your account never, unless you have 1 pip stop loss. I mean, it must be something that makes sense. Okay, you already know how I trade, so trading like I trade, risking 1%, and I fail, and I miss the news, I will probably blow my account. Okay, so this was regarding NFP. I'm going to comment the other ones quickly. So CPI and GDP. Okay, remember, CPI and GDP is one of the 4 news that we can enter charts at 1 a.m. or before 2 a.m. because the news are at 2 a.m. So we can trade before 2 a.m. before the news. In this case, CPI is the most clear news of the 4 that we have at 2 a.m. In this case, the clarity is 60%, difficulty easy. The probability of whipsaw is really low, so most of the times it just make a candle without a wick or 1 or 2 pips wick, so never will take you out and then go to your take profit. And most of the times it makes a huge candle, so if you fail, you will probably blow your account. Next one, CPI of United States, also the icttrading. The most of the news regarding USA are at the same time. Clarity really similar to the CPI of GBP. Difficulty easy, whipsaw, and it's not usual to make whipsaw. And if you fail, you will probably blow your account, almost 100%. So please, trading this and this news, make sure that you know the bias almost 100%. I wanted to comment that there are 4 news that are really important. CPI, interest rate, and the other one was the GDP. Okay, so these are the 4 most important news to me, meaning that be careful trading. So let me see. Okay, be careful trading the previous session. Be careful trading the previous session. You cannot trade the previous session, and you can trade the previous session. Oh, sorry, I have FP here. Be careful trading also previous session. I would say FOMC. I would say don't trade the previous session before FOMC. You can trade NFP and CPI, but maybe the price action will be a shitty price action. You cannot trade interest rate. For instance, if you have Euro interest rate, you cannot trade Euro pairs. You can trade GBP pairs, but you cannot trade EU. You can trade Canadian, whatever you want, but not interest rates. If you have interest rates of the Canadian pairs, you cannot trade USD CAD in London. Okay, and you can trade GDP. Sorry, you can trade the previous session of GDP, but just be careful. I mean, when I say be careful, it means low hanging fruit objective. We are not going for the full dragon liquidity. If you have something, we take the profits. Okay, so once this is comment, let's continue. So this is, to me, I have my 2 favorite news, which are this one and this one. First of all, regarding CPI of Canadian, exactly the same time, A30 clarity almost. I mean, this doesn't make sense because I don't have the full data of every single news that happened, but I would say 90% of the times it was really clear. I mean, really easy. Difficulty really easy. Whipsaw almost never. But what happens if you fail? It is a huge candle, so you may blow your account. Okay. Why? Because imagine this is the news and this is your stop loss here. So you went short here, okay, and price went long. Price won't respect your stop loss. Okay, price won't respect your stop loss and will take your out here. So if you wanted to risk 7 pips, the stop loss will be 38. So if you risk it 1%, your account is blown. Okay, your account is gone here. Okay, so next. Okay, PMI. This is my favorite day of the month. PMI. I love this day, but be careful because same happened. I mean, my best and my worst days was on the PMI day. Why? Because there are a lot of news on that day and price moves a lot, and I like to trade every single move, so if I fail, be careful. So now if you remember the last PMI day, I traded okay, so there are the first news regarding PMI is the PMI France. The second one is always the same, okay? Germany. Next one is services of GBP, and the last one, this is for New York, services of USA. Every single PMI day it's exactly the same, and the time is when the news are is if the month have 4 weeks, it will happen on the third one. If the month have 5 weeks, it will happen on the fourth one, which is between the 19th and let's say 26th of every single month. Okay. Why I'm saying this? Because this news happen again. Maybe I will find you see here, this happens again. This was on Monday 5, but you see this is not a red folder here. It's just only in this case we have 4 weeks. So look at this. On 22nd we have first of all PMI in French, second one 330 German manufacturing PMI, 430 flash services of GBP. This is not regarding PMI, and finally flash services PMI of United States. Okay, so this is a really important day. You can go back and look all data about these days. That's what I did when I was studying news, going every single old news of every single one of these ones. And by the way, there are news that you will miss here. For instance, every first week of the month that we have NFP, we also have which is called ADP. This one. This is always on Wednesday at the NFP week, always 100% of the times. So I don't trade this news, even it's a red folder here, and you will also see that on the previous week. Oh, sorry. Wednesday here, You will also see that is a red folder on both websites, but price, it doesn't move with this news. I mean, sometimes we'll move 10 pips, but I hate trading this news because it's really shit. Look at this, 8.15. You see, doesn't happen anything. So I don't trade that news. That's why you won't see the news here regarding ADP. Alright, so let's continue. I was here. This is a really easy day to trade. This is the best one. You won't see that the French PMI because compared with Germany, this is most important one. And also you won't blow your account because only move between, let's say, 20 and 40 pips. So I don't think you will blow your account with this news. So following with us with the next one, this is one of the 10 a.m. news regarding. This is not the one I told you. There are three news that are really similar. The first one is ESM services PMI. Second one is this one, that is the one I told you of regarding PMI, and the other one, this one. This happens every single first day of the month. Okay, but we were here. This is really easy news to trade. You see, when this is up of 50%, I would say it's really easy. Also, if I write 1 star here, really easy. Also, if there is no whipsaw, even more easier. Okay, let's continue. This one really easy. Okay, first one that is difficult to trade, the GDP of United States. Okay, clarity, 17%. I mean I don't trade this news. Why? Because I like trading the news that it have what is called like a god candle. For instance, see the NFP. You see in one candle made 40 pips. I like trading this kind of candles, which are really clear. I don't like trading the candles that it's not clear to me. I mean, most of the times on GDP, what happen is, so this is London, and during news, the turtle soup is already done, and this is 8:30, and what happens is it makes another turtle soup, and then go lower. And this is the news, so we trade after the news in this case, or before, but not the news. That's why I put 3 stars, and I don't trade this news. Okay, but what happened on GDP regarding Canadian pairs? So it's really easy to trade. You see 80% of clarity, easy trade, and no whipsaw. Also, if you fail, be careful because you may blow your account. Okay, also this is important, PPI. This happens if I am not wrong on the second week of the month, but even it's up to 50%, the difficulty to me is 2 stars. Why? It's not really difficult to trade, but you must know exactly what's happening. So you must know my strategy, not 100%, but I would say you must be advanced to trade that kind of news, and you will see some example of why it's difficult to trade. Also no whipsaw, and maybe this is probably higher. I would say between 30 and 40. I would write 35 or not. Okay, because some days are 20 pips and another days are 40 pips, so be careful with trading PPI. Okay, this news is regarding interest rates of Europe. The time it's not 8:30 like the most of the news. Clarity only 50%, but 2 stars of difficulty. Why? Because it most of the time doesn't make a god candle. It moves only between 20 or 30 pips, and a lot of times makes whipsaw. So be careful trading that news. If you remember, I made a live trade trading that news, and I didn't trade the news. I trade like 2 minutes after the news or 1 minute after the news. Okay, next one, interest rates of GBP. This I like trading this news, but even you see almost 90% clarity. The difficulty is 2 stars. Why? Because uh, to me it's not really clear. It makes weird things, let's say. Okay, it doesn't make whipsaw most of the times, and you have probability to blow your account if you fail. Okay, so this is a really easy news to trade. Interest rates, so every single interest rates you can trade of every single asset. See here, I don't trade this interest rates because it happened when I'm sleeping. This is New York time, by the way. I didn't say this, but time is regarding New York. The time I also have on my charts, UTC -4. Going back here, if you can trade that news, it's really simple. So if you're awake, you can, and you understand how to trade news, you can trade that one. Okay, next one, this is a tricky news because during the month there are like 2 or 3 unemployment claims news, so which is a lot, and sometimes it's clear and sometimes it's not clear. So this is what I write 2 stars, because if you are not advanced, you know which one are the ones that you can trade on or not. Okay, this one, these 2 of them, remember it's one of the 2 a.m. on New York time, so you can enter the chart before the time you are entering most of the times, but it doesn't mean that you must trade the news. If you realize here, the clarity is 22% only, and the clarity here is 32%. So in this case I put 2 stars on both ones, both of them, because to me it's not easy to trade. To me it's better trade after this news. So just wait 5 or between 5 and 30 minutes and you can trade on this day. You will also see some example. But also, if you fail, you won't blow your account because it only moves between 10 and 20 pips, let's say. So with a normal stop loss, you won't blow your account. Okay, so this is one of the PMI news. You remember here, this is regarding GBP. What's happened on this one? If in Germany the price has moved a lot, be careful trading this news. If the price on February doesn't move a lot, you have free right to trade this news. Okay, so you have the advantage that you already know what happened before, 1 hour before. You will see some example also of this news on that episode. Okay, so next one, unemployment rate of Canadian pairs. Easy news to trade also. Okay, this one, FOMC, remember, is one of the important news, but in this case I don't trade that news. The first reason is it is because it's late in Spain. I mean, it's not night yet, but I'm tired when comes this news, and it is not clear. Most of the times it makes something like this. It's consolidating before the news. As I said, be careful trading the previous session. I mean, if this happens on PM session on New Year, be careful trading the AM session on New Year. This is FOMC, and sometimes makes something like this, and maybe comes back here. So you don't want to trade low probability scenarios or advanced price moves. Okay, you want to trade what is easy. This is really easy, you see. Another times what makes is first make the fake move, and then after 30-20 minutes makes the second part of the move. So I don't trade that news. You can do whatever you want, but this is just what I recommend. Not trade that news. Okay, following with the next one, I said this is one of my favorite news also. It happens on the 1st of the month. You will see the first day here, 1st of the month. it is really easy to trade, and there you go, 80% of clarity and no whipsaw, and you will blow your account. Retail sales of USA, 80% clarity, really similar with this one, but this happens at 8:30. This is one of the news that I don't like trading, retail sales of Canadian pairs. Actually, okay, no, I was confused. So this is the news that you can trade regarding Canadian pairs, but I won't suggest you to trade this news. Clarity only 30% and difficulty 3 stars. It doesn't mean, like always, that you cannot trade previous the news or after the news, but I wouldn't trade the news. This is the main reason, because most of the times it makes a whipsaw. Okay, following with the second one, CPI on Aussie dollar. This is also night on Spain, so that's the reason I don't trade that news, but you see that is really clear. So if you are awake, you can trade that news. Okay, so this is the pairs that I trade most of the times, but there is a pairs that there is an exception. One of them are Chef, and the other one it's New Zealand. I didn't write the New Zealand news, but it's exactly the same of the Aussie news here. Okay, just change the Aussie for New Zealand. So I trade the CPI of Chef. This is London, you see, 230. The difficulty is 2 stars, so be careful. I put 2 stars because I'm not familiar with the Chef pairs, because I never trade, and also for the big spreads that have on the most of the prop firms, I mean most of the brokers. Okay, so if you normally place 10 pips stop loss, I would say that 12 or 13 it's okay. Also be careful, if you fail, you probably will blow your account. Exactly the same happens on interest rates, which the time is 1 hour later, is 30, and it's exactly the same, the values. Okay, this was regarding the news I trade. This is the ones that I trade. If you see a news that is not here, just avoid trading them. Okay, what is this? This is regarding the USA news are this one. This is the ones that I write here. And what do you see? This is the pairs that you see. This is the majors, which have USD on the right or on the left. In this case, Euro USD, GBP USD, Aussie USD, New Zealand USD, etc. In this case, USD CAD, USD CHEF, etc. Okay, so you are watching both of them. For instance, you are watching Euro USD with GBP USD for confirmations, or if you don't see a clarity on one pair, you can watch the other one, or you can watch you can use it for watching SMTs, whatever. So regarding the Euro news, we only have this one. Well, this is the only regarding Europe, but also manufacturing PMI of Germany. It is this one. This one. Then you have to trade on Euro pairs. The GBP pairs are only for. This is GBP. As I said, for watching for confirmations, SMT, whatever. But you're trading these ones. Going into GBP pairs, these ones, the 4 news that you can enter the chart before the usual time. This happens on, this is 4:30 and this is 7 a.m. New York time, and exactly the same here, but in this case you are trading GBP pairs. Obviously you are not trading your pairs with GBP news. Going into the Canadian news, these are the ones that we have, and we are watching these pairs. USD CAD you can compare it with DXY. EUR CAD you can compare it with GBP CAD, but you can trade both of them. I mean, both of them will move exactly the same, and exactly happens here. You can use these ones for SMTs. Well, I will explain this later, but you will use EUR-CAD and GBP-CAD for SMTs and trade USD-CAD, for instance. I mean, you see that CAD is on the right, so all the pairs will move exactly the same. It doesn't matter that EUR and USD are on the left, because it is a Canadian news and CAD is on the right. These five pairs will move exactly the same. Okay, and this is really simple. Aussie dollar, we have only these two news that we trade. We trade these two pairs. I don't like trading these pairs because it have huge spread. So this is the two pairs I trade. This is where we see our confirmations or SMT. Exactly the same happens here, but in this case changing Aussie for New Zealand. So in this case New Zealand for US AUD. And regarding CHEF, we can trade the three pairs that we have here: USD CHEF, Euro CHEF, and JP CHEF. When we have one of these two news, I watch the three pairs looking for SMTs and ranges. If we have the direction of one of them, we have the direction of the third of them. For instance, if you don't see the clarity on both of these news, but you have here a real clear range, the three pairs will move exactly the same, because CHEF it's on the exactly same, it's placed on the right. So you will have this page, this Excel. I will see if I can download as a PDF or something. And let's start with the news. First of all, I'm going to rest like 5 minutes, and let's start. For you will be just only 1 second, but I need to rest. Okay. All right, let's continue with the episode. I think with 2 charts is enough, so let's start. Okay. You have seen that it's really similar regarding the setup videos of New York and London that are really similar. The ranges are exactly the same. The only difference is that this case, if the news are on New York, this will be London, and if the news are on London, this will be Asia, right? This is really similar of every single. The charts are the chart. Candles are candles. So the difference with news is that the move happens quickly, but the rest is exactly the same. So this case, if this is London, so maybe we have a reversal on New York, and these are the news. So you won't see 3 candles, but with only one you will see something like this, and this will be the news. Or if there is a pending range, here is the pending range, and the news will just complete the movement. Also, we have another setup, which is this one. Remember, you already know all the setups, the possible setups, and the news are here. So if this is the hourly chart, so the news, it won't stop here, but it will continue higher, something like this. If this is the daily chart and the news are here, the target of the news is here. Okay, really simple. You will now see some examples, so don't worry. But before going into how to trade news and going to see examples, I will talk about the red flags and how to avoid and not to trade some news. But by the way, you already know the red flags. It's always the same. So starting with the first one, if we have news, this is 8 a.m. We have news inside the previous candle, we are not allowed to trade. Hello and welcome to the trade management and risk episode. On this episode I'm going to talk about how I manage my trades, when I place break even, how I exit my positions, regarding risk, how I pass the challenges, and how I trade the live accounts. Okay. So first of all, I'm gonna start with trade management. So regarding which pair I'm trading, most of the times when there is no news on one particular asset, let's say, for instance, there are interest rates on yield. So in this case, I only trade pairs that contain yield. Or imagine there are CPI on GBP. So in this case, I only trade GBP, USD or whatever, but GBP pairs. So this is when there is a news that affect to one particular asset. When there is, for instance, news that have from, for instance, USA, so it's in United States news, I can trade both, or Aussie dollar or whatever, USD CAD. Understand? But what I want to say with this is that I can trade both pairs at the same time unless there is a news that affects on only one pair. Okay. Once this is understood, I want to so most of the times there are always a range that is clear on one asset and not as clear at the other one. Okay. So in these cases, I don't care. We can trade both, because if there are a clear down liquidity in one asset, it will be a clear down liquidity on the other one. Meaning that if here we have a clear turtle soup here with this range activated, we can go on here and imagine this is EU. Imagine in JP we have, for instance, this. You see that here failed to create the lower low, but in this case also GBP has activated this range, so both pairs are okay to trade. A red flag could be that on GBP didn't activate the range and you activate. In this case, it is a red flag for trading this pair. But if the both pairs have the range activated, I'm okay with trading both at the same time or only one. The one that I want to choose for some reason. Okay. So this is regarding which pair I'm taking. Second, the next what I want to talk about, it's regarding the trade management. So imagine we are short now. This is our down liquidity. So if I trade the turtle soup, I will enter again here on the order block or range high, acting like a changing sales delivery. If I'm here short and I want to add more R's on my position, I can trade the last leg. Okay, here. As you know, I don't like trading this leg because this could be something like this, but also could come back to the range high or whatever and stop you out. That's why I don't like trading in the middle of the range. Okay. So in this case, if I took the most optimal entry, I will enter again here. What's the benefit of doing this? That you can place your stop loss to break even, or you can reduce your risk here. In this case, if you risk it 1% here, you can risk another 1% here, and your full position will be 1.5 instead of 2%. Here, I like enter again in the position when it's really clear that we'll complete the leg, going into the dragon liquidity. So, but in this case, I'm not looking for, well, I will talk about this, but on the last leg, I'm only looking for 1.5 R, no more than this. Maybe 2, depends on the cases, but most of the time it's just 1 R. On the most optimal entry, I want 3 Rs minimum. If it's not the most optimal, but it is high on the range, I'm looking for 3 Rs again. If it is on the order block or changing status already and it's not in the most optimal zone, I can look for 2.5 or 2 hours. Here on the last leg, I only want 1 or 1.5, maybe 2 hours maximum. But 1 hour is what most of the times I'm looking. Okay, this is if there are no news on our trade. If there is news or I'm trading news, I want 4 hours. Why? Well, you'll see on the news episodes. You should, if you're watching this video, you should have seen the episode first because it's the previous one. But when there's news, I like to trade the news that there are no whipsaw, so it's not necessary to have a really big stop loss if I know the drawn liquidity. Also, because of the speed of the news, it has a bigger move than if there is no news. So for this reason, I'm looking for 4 hours when I'm trading news. Okay, so this is regarding the risk, sorry, the risk reward. And now regarding my break-even placement. When I move my stop, okay, if I enter on the most optimal short, I like to put my stop to break even really fast. Why? Because if it's the most optimal entry, it doesn't need to come back here. If it comes back here, it's probably making another higher high, and then maybe the real movement. So if I was short here and on the reality there is another higher high, I don't care. I got stopped out at break even here, and I can enter exactly at the same point, but after the turtle soup is done. Why? Because as you know, I don't like trading. If I'm short, I don't like trading the buy side of the curve. I like trading once the turtle soup is done here on this pair. That's why I don't like being on dragon. Okay. What else? Well, everything I'm telling you in this video, it's about my experience. It's not maybe your reality. For you maybe you have a better trade management or whatever. This is how I do it. So here we are. Okay, regarding also the break-even placement, when I move my stop loss to break-even. So imagine this is a 15-minute range here. This is an liquidity still. So imagine this is the Monday example, if I'm wrong, or Tuesday. I will take a look now. I think was here. This is Tuesday. Okay. So this is a Tuesday example. Imagine this is a 15-minute range. So in this case, the bias was bearish, and here failed to complete the 15-minute range. So here for me, it is just another short opportunity. Here I'm not moving my stop loss to break even yet on this position, so I'm just double my risk on same position. Why? Because I know it's going to my dragon liquidity 100%. If it completes the 15-minute range, imagine here it's activated, is a pending range here activated, here complete. So here I'm not selling again. If I'm selling here, it's because this position has risk free. Okay. Okay, next. How we can trade this leg? I'm only trading this leg if I'm already protected here. If I have no risk on the other trades that I'm before that trade, I'm not taking this one. In this case, we can trade this one, but our stop loss must be above the range high. If it goes here, it is that it's not respecting the range high, so the short is not valid anymore. So the stop loss placement it's perfect here above the range high, and depends on where it's on the range. We can look for 3 or 2 hours because it is not an optimal zone. Here it is an advanced short opportunity that I didn't explain. It is an advanced model that I have. I will talk about it on the next episode, not on the model, but you'll see. Which is on the last quarter, and well, you'll see on the next episode. So this is regarding trade management. Now regarding the risk, how I pass my challenges and how I trade challenges on live accounts on Twitter. Let me check on my notes if I missed something. Yeah, I want to explain about my exits. You already know how I exit my trades because you should have seen my reviews, most of them. Every single review I explain my exits. So, well, first of all, I wanted to explain the example that I just said here. This is Tuesday on EU this week, and I short here. So this is a 15-minute range, and look at what happened. So my first short was here, something like this, and I exit at the 4 AM candle. So you see that here we have a displacement, but fails to complete the 15-minute range. So this is to me, this is just another short opportunity, and I went short again here. Always after the turtle soup is done. Here I went short on the sell side of the curve, and exactly the same here. So regarding the exits, you already know how I am exiting. If it's a new candle open, I have an excuse to exit my position. Why? Because maybe even the bias is bearish, maybe this is a restarted range, and just activated the 1 hour range low and goes back here and stop me out or take me out to break even, and maybe continue with the trend. Remember, every exit is an entry and every entry is an exit. So if you are short here, you want to exit here, but if you want to go long here, you have to go long at the exactly same point where someone is exiting here. Exactly the same happens when you're long. When you're long, you want to exit your position here, and if you want to go short, you have to go short after the turtle soup is done, which is exactly the same here, and every single time it's the same. You already know why this happens, because the algorithm wants to. This is what the algorithm is doing every single time. Take the previous range low, because the algorithm must be efficient for the both pairs of the candle. So this is exactly what we are doing. If the candle fails to complete this high, we will see on the next candle that will open, make the power free, make the lower low, and complete the range, something like this. Okay, this is the pending range activated. Well, we don't know if it's pending or started or the range that whatever range. This is just the range activated. This fails. We're in the last quarter, so the next candle we complete the range. Done. Okay. So exits. First exit. We are at the end or at the beginning of the candle. Say not all that and or I don't know, it's right like here, to be honest. Well, we are at the end of the beginning of the candle. If we are at the beginning of the candle here, for instance, after the run equity, we have an excuse to exit. Exit position. What else? We can wait for a, imagine we are bearish in this case, wait for a lower low. You see, here is the 4 AM, so we are exiting here as soon as make the lower low. If we don't want to exit here,
stop loss above 5-minute candle, meaning that our stop loss must be here. Stop you out. And of course, this trade is at break even, and it's also a a partial opportunity. Now, this is when it's the beginning of the candle. When it's the end of the candle, so imagine that liquidity was hit at 345. Stop loss placement. We are short, so above 5 minutes, meaning that here, yes, here I said this is 45, so here is our stop loss. Wait for the new candle. When I say new candle is, imagine this is happens, the liquidity is reached at 345. So we wait for the 4 AM candle to make the lower low. Okay. And here we go back exactly here, or exit, or wait for a lower low, and your stop loss must be above 5-minute high here. Another possibility, wait for a lower down liquidity. So imagine you don't want to exit here because there is here another down liquidity. So your stop must be at break even because the first down liquidity is reached, and you can exit at the next one. Imagine it's here. Look at the time. It's the beginning of the candle, so because of it's the beginning of the candle, we can exit or wait for a lower low. Imagine here, here, and our stop placement must be on this candle. So right now we are stopped out here, and we don't care if it's in continuous or it reverses. So I think my exits are, I mean, I can explain you this, but I prefer you to see my reviews, how I exit the trades, and see it live, how I explain and everything. For instance, yesterday's price action was quite interesting about the trade management because it was a really shitty day with a clear down liquidity. The down liquidity was the 8-hour range high, I think. Yes. So I missed the first entry. Well, actually I took this one, but I left here. And I entered long again here. Here you see that displays from the order block, and it comes back to the most optimal zone. I didn't take anything out here, but you can go out here because your stop loss is at break even, so you can exit here, and as soon as it makes another order block, which is here, you enter again here. Why? Because you don't want this drawdown, because this drawdown could go until this low, for instance, or whatever. So exactly the same here. Here doesn't stop you out, okay, good for you. But what's happened here? Stop you out at break even again. Okay, bad luck, but if you know that there are liquidity, why not enter again? So in this case, we have that 5-minute range, and look at the time. This is the end of the 9 AM candle, so this is a failure swing of the 10 AM. See, the 10 AM looks like this to me. So here, inside here, is our next longs. We want to trade after the turtle soup is done, so we want to trade at the right of the curve.
meaning in this case buy side of the curve. Where are we exiting? Look at the time, it is almost the end of the candle, so we can exit. Of course, your stop loss is break even once it reaches the round liquidity. We can place our stop loss here. This is because it is the end of the candle, we can exit once it makes the higher high, or we can wait at the 11th making a higher high. So here we can exit. In this right now we are at the beginning of the candle. Where is our exit? So we can place our stop loss, because in this case makes the higher high, we can place below the 5-minute candle, and we can exit here. Here you see your exit, and if you are not exiting here, you are stopped out here. You don't want to trade you don't want to hold the trade after the round equity, basically because it can reverse, and exactly what happened. Okay, so this is regarding the exits. So now, regarding the risk, I want to pass my my challenges really quick. So I would divide in 3 parts, which is from 0 to 3 or 4% up on the challenges. You risk, well, this is what I do because I don't like wasting my time trading challenges, so I'm a bit aggressive. I would say you can risk between 1 and 2% per trade, and you already know how I'm pyramiding my positions. If I take the most optimal entry, I enter again the order block or change state of delivery. That would be the orange high, orange low, and I'm adding 1 hour at the end of the movement, at the last leg. So if you compound this is 1% plus 1% plus 1%, 3%, aiming for 3 hours. The first trades, it is 6%. The other, if I took another one, it is another 6%. If I add 1 hour, it is another 1%. So you have more than the 8% that you need to pass the challenges. If you are up 3 or 4%, what I would do is aim for the next trade, pass the exam. So imagine we are up 3%, I will risk 3 or 4%. We don't want to the daily limit to be reached. So I think most of the times it's 4% on the most broad firm, so we don't want to risk more than 4% if we're in profit. If you are into a bit some drawdown, for instance, from -1 to -3, I would trade exactly the same. Nothing changes here to me. Okay. I mean, this is really easy to recover. To me, I think with this strategy, just keep doing the same. So no problem, you can do exactly the same. If you are between 4% drawdown to 6%, I would reduce my risk on the half. I mean, if I am trading with 1% risk every trade that I take, I will risk only 0.5% risk. If I'm trading 2% per trade, I would trade only 1%. We want to come back here. Then we want to come back here, and here we want to pass the challenger. Okay, imagine the worst situation. We are between 6, 7, let's say 7. Depends if the prop firms are 8, and depends if the other ones are 10%, the maximum drawdown. So between 7 and 9%. To me, you have 2 options here. First of all, you don't want to be on the situation. If you can avoid, please avoid the situation. But imagine for some reason you have an old account, whatever. You are here right now. What I would do is two options here. First one, the one I recommend, really low risk.
you want to come back here. This is your first one priority. Come back here. Another one. Risk, maximum leverage. On one of the news that I said that there is no whipsaw, or there are really low probabilities of whipsaw. You want on that new to have 100% your down liquidity on really easy. Why? Because if you fail, you of course lose your account. But if you have only one bullet, don't lose it on the first news that you have. Imagine you are on Thursday and there is a random news on Thursday. For instance, the GDP on USA. I said that don't trade that news, but you are minus 9%, and you just want to stop trading that challenge because it's literally ruining your mind. Okay, no. If you want to do this, buy another challenge and trade on the other one, but don't lose your last bullet on that one. Wait for a really easy news which are really clear down liquidity. Okay, that's what I would do. And risk maximum leverage. I mean, you can even risk 5% and you will pass the challenge, or on the worst case scenario, you will come back between here or here. You will be again at break even, or you will be with a really low drawdown compared on where you were before. Okay, this is regarding the challenges. Well, on the second phase, I would trade exactly the same here. As I said, I would trade first 1 or 2%. If I hit take profit, in the next trade I want to pass the challenge. If it's a stop loss, exactly the same. I mean, I trade exactly the same if it's the first step or the second step. Okay, these challenges. Regarding live accounts, here it's completely different. Why? Because we don't want to be banned of the prop firms. Okay, if you are doing every single day 5%, or you are on the leaderboards or whatever, you are under his radar. You don't want to be there. You want to risk just a little bit. I would say risk only. To me, this is only one option. Half percent or quarter percent, no more than this. And we want a lot of accounts to be trading every single day. Well, depends on if you have time and you want to trade every day. I like trading every day, so I want a lot of accounts and be able to trade every single day, aiming only for 1% or 1.5% if I hit 3 hours. But this is the risk I would do. You don't want to appear on the leaderboards because remember, the prop firms make money if you fail the exams. If you pass every single exam and you are withdrawing money every single week, you are not profitable for the firm. And if they want, they can just ban you or say that you are doing copy trading or you're trading news, whatever. They can say whatever they want. Okay, so just take a bit and get out of the trade and withdraw that you made, and you will be eligible for the payout. Okay. Trading live accounts, I would do exactly the same here, but the risk will be less. I mean, to be on minus 2%, you will have 4 stop loss in a row. To be honest, I don't know if this is possible trading that strategy, so I don't think you will be on that situation, to be honest. But it's exactly the same. But you should have to change the risk here. Meaning, if you are minus 2% drawdown, you can, don't risk 0.1. I mean, it doesn't make any sense. You can still be risking 0.5% or 1/4% until you are at minus 1%. Then, because you are in negative drawdown, negative 1%, so then you can trade 1%. But this, I would say that this is for every person has its own management. I mean, I don't risk
every single trade exactly the same position. I mean, I don't know. Depends of every trader. This is how I do it, and exactly the same on the trade management. This is how I do it, but it doesn't mean that it's the best way to do it. It's just how I do it. Okay. So this is how I trade live and challenge accounts. You don't want to spend a lot of time here. Only purchase a challenge or buy a challenge account if you can afford losing it. If you can afford losing it, you want to trade quickly because you don't want to spend time trading challenges if you want a live account. If you are trading a challenge because you want to feel what is trading with real money, it's okay, but you don't need to risk 1%. You can just you can risk 0.25% per trade every single trade, and when you are ready, you will only have the account with a very low drawdown, or I think you will be positive. But yeah, this is everything I wanted to talk about regarding this episode. I mean, this is not a theoretical content as I said. Yeah, this is gonna be it. I wanted to say that this is not the last one. It will be another episode regarding what's next. I mean, when you are done with our reviews and the episodes and everything, what's your next step? But I will talk about this on the next episode. So this is gonna be everything for this episode, and thank you for watching, and see you in the next one.